Atlantic and some M&A in the mix as well. So it is Monday. We start trade. The opening trade here for Europe then. Let's see just what kind of weakness we have across these European equity markets this morning. I can see the DAX is pretty flat. The FTSE is out at the gates and a little bit weaker. As I mentioned, that was a bit of an underperformer during Friday's session. Some of the FX moves having an impact there. We are waiting then. This is all sort of treading water stuff, or actually either side of the flat line, perhaps then for the DAX and the FTSE 100. Waiting then for the CAC 40. You can see that small C just to the right-hand side of the number for the CAC, and that indicates it is closed. That doesn't look that well. There we are. We're down by, well, it looks like 0.5%, which maybe is all we expected this morning. We did expect a little bit of weakness, and that is just a little bit of weakness, I suppose, a bit of nervousness attached to the French politics, waiting to see how conversations around putting together a government then, Chrissy, really pan out. This is what we have then for you right now, down by 0.6% now on the French market. We're looking for weakness across the French banking sector, perhaps, because if the left is going to be, even not in a majority situation, but perhaps with more of a say, more of a steer around government policy making, although should we have low expectations for any policy making in a hung parliament, if the left is, though, more in a driving seat, what will that mean for the banking sector? We're also watching some of those infrastructure names that Joe was talking to us about. It is a complicated story around French assets, though, Chrissy, but that's what we see on stocks so far this morning.
And as we kind of well just prescribed here is that those banking stocks, especially in France, are dragging down the entire index. Your BNP, SocGen, Credit Agricole shares all falling over 1% and still dropping as we speak, Anna. So you are seeing some real pain in the market. But I should mention, as we talk about some of the kind of underperformance of the French index, there is some green on the screen. In particular, Sanofi, for example, is higher by 0.2%. Not a major move to the upside. You have a couple of other names in the green, so it's not all broad declines. But at least in the French index, it is one thing that you're going to be seeing. It is also a tale of two heavyweights for the broader Stoxx 600, for example. In terms of index contribution, it's your ASMLs, your Novo Nordisk that are moving to the upside. But to the downside, again, a lot of your French names are dragging on the index, alongside some of the commodity names as well. And that simply might be in line with the move you're seeing in oil, for example. Brent crude trading at an 86 handle, down about 0.5%, Anna. And there, as a result, you're seeing your Shells, your Totals, even your BPs and Rios down a little bit.
Yeah, and the overall, you're right, the overall movement in French stocks is down 0.6%. But yes, there are some areas of green. TF1 and M6, they both rise as the far right loses the election. So clearly there was some linkage in the market's mind between the media assets in France and having the far right with a greater say over policy making. So that's the French story. In terms of the overall sectors then, food, beverage and tobacco is the best performing sector, and we have seen some M&A in that space. Both Carlsberg and its bid target, it would seem, moving higher this morning. Let's get a view on French assets with Frédéric Carrier, who is Head of Investment Strategy for RBC Wealth Management and joins us this morning. Very nice to have you with us, Frédéric. Thank you for joining us. Your initial response then to what we've seen, because it does seem to be a little complicated, how you interpret. In the immediate aftermath, it seems there's a negativity around French assets. But I wonder to what degree and over what time frame that's sort of justified.
So we do expect the risk premium of French assets to increase. It had decreased slightly last week as people had gone from the idea of an absolute majority of the far right to a relative majority, to a hung parliament. But now we have the far left, still a hung parliament, so still fiscal uncertainty, still a combative relationship potentially with the EU, so not very good news. But remember that the far left want to roll back reforms, and they also want to freeze the price of essential goods and services. So in terms of the impact on the stock market, you can see these sort of staple stocks potentially being impacted, stocks which are also dependent on French bonds, on spreads such as banks, such as utilities, the idea that concession terms might be renegotiated, frozen prices, frozen tariffs, all of those stocks are likely to be under strain.
Okay, so we'll wait to see how the politics plays out, and there's a lot in play. Will we end up with a technocratic government? Will we have a sort of centrist government?
Yes.
Who will be the new prime minister? There's a lot of unknowns. As we're watching this, how much, Frédéric, should attach to international names that the international investor would know about? You know, these businesses are, yes, French, but not entirely dependent on a French story.
Absolutely. For our wealth clients, our key picks in Europe are global companies, global leaders in technology, in healthcare, in industrials which are underpinned by digitization, electrification, and we don't expect these stocks to be really dragged down by domestic French politics. And if anything, if the situation were to worsen and people were to take fright and sell French assets, sell perhaps European assets, we would take that as an opportunity to add to positions.
So that's the equity story a little bit. If we can broaden out for a moment, I'm curious about your view in terms of how the French markets react to the rest of them. The ECB, for example, this is my obsession of the morning, if you will. There's a lot of pushback from markets and from economists alike saying that the bar for ECB intervention is high if we continue to see this sort of panic in the markets. You're seeing it in the equity markets already. That drop is continuing. At what point does the ECB need to raise their eyebrows and pay a little bit more attention?
So I'm sure it's paying a lot of attention, but remember, it cannot intervene in French bonds at the moment if the problem is fiscal sustainability. One of the reasons that spread is widening is that France has a deficit of more than 5% of GDP, and it doesn't look like any government which might come out of this coalition will reining the deficit. So spreads might widen further. It would intervene if there was a reaction on, for instance, other sovereign bond markets, Italian bonds spread widening. We would think that at that point it would intervene and use some of its tools to stem contagion. But it will let spreads in France widen, and that is the mechanism through which the government would receive the message that it cannot have an expansive fiscal policy.
I think you're the perfect person to have on the show when we're coming back for the deficit, simply because these are multi-month, multi-year processes in terms of getting this under control, which is great for your investing time horizon as well. If you're trying to position around France in terms of while they're trying to get kind of their deficit under control, what's the trade here?
The trade is to stay put, look at your positions, and look at what happens in September. That's when they have to present a new budget, and that's when we really see what the true colors of the government are. But again, for us, we invest in global leaders with a very well-diversified revenue base. So we keep an eye on things, but we're not overly concerned at this stage.
What about capital markets activity, Frédéric? We heard our colleague Tom McKenzie in Paris earlier talking to Voices on that front and asking about whether capital markets activity might be delayed in France. And I ask this partly because, well, obviously because of the French politics, but we've seen a little flurry of M&A activity and other capital markets activity in other parts of Europe this morning.
So I would think that M&A activity would continue. Some valuations are very attractive. IPOs, I would think, might be delayed. There is some uncertainty, and certainly with a less pro-business government, that might affect some of the flows.
Can I ask about the UK then, with that in mind, because obviously we've seen this Britvic-Carlsberg, or this Carlsberg offer for Britvic, and that's been accepted this morning. What impact, we have some political certainty in the UK, and perhaps that's completely unconnected to that news flow, but it's interesting that it comes just after we secure that political certainty. What is the focus for you around UK assets? We're going to hear from the Chancellor, Rachel Reeves, later on this morning. She's going to be talking about growth, and she has to deliver a lot of growth if she wants to deliver on the budget plans that everyone assumes. Yes,
I mean, she will talk about growth a lot. There's not very much fiscally that she can actually do. the two pillars, the pillars of growth that they have is a closer relationship with the EU, which is not entirely for them to build on, and also planning reform. So we do have hopes for planning reform, but we expect a growth trajectory which is perhaps slightly above what we've had, but fiscally a path which is quite restrained. So we don't see much of an impact in the short term, both in terms of growth and in terms of the Bank of England. UK assets, equities are extremely cheap, and there's been a lot of takeover interest, particularly in the mid-cap sector, and we think that this political stability that you've mentioned, that is really going to encourage the flows. So combined that and perhaps an overview of how UK pension assets invest in the UK, that might presage better days ahead for UK equities, but we remain cautious.
So what changes that? If you start to see more of these kind of mid-market acquisitions, what stops it all in its tracks?
Well, I'm not sure. None of the political instability has held back the takeovers that we've seen. It's really what holds back the UK is the index, the composition of the index, with a lot of defenses, with a lot of energy stocks, at a time where it's really growth stocks which are driving investor enthusiasm. So while we see limited upside for UK index, we do see some attractive opportunities in takeover candidates, in particular mid-cap stocks.
All right, Frédéric Carrier, Head of Investment Strategy for RBC Wealth Management in the British Isles and Asia. We thank you so much for your take on this very big markets day, of course. And speaking of, I'm going to put my Guy Johnson hat here and look at our sensational six, the heavyweights that are, of course, our comparison to the Magnificent Seven. You can see a little bit of a mixed picture here. Some major outperformance from ASML, of course, so you do have that tech leadership. But if you look across the board, you also see not a ton of movement in Ferrari and Nestle and Schneider Electric. You are seeing, of course, LVMH really suffering in line with some of those French stocks as well. So the sentiment read-through spilling over into luxury as well. Let's get a quick check on some of the other individual stocks on the move. Joe Easton's keeping, I think, a particular eye on the French story as well.
Absolutely. So we are starting with the French stocks, seeing some losses at the moment, but not huge losses, in fact, given potentially some of this was already priced in, the negativity around the uncertainty in France. That is a surprise, of course, with the left-wing success. But a lot of these stocks have come down a lot over the past month or so. So SocGen, BNP, and also some of the government contractors, Vinci, one of them, seeing small declines today, but not massive drops for those stocks. One stock that is seeing a massive drop is Delivery Hero. Actually, I've got that one completely wrong. We're going to deals first. We got some deals moves. Britvic, this one is up 5%. That's the takeover news that we had breaking earlier today. Carlsberg agreeing to buy that company, and that is therefore getting a bit of a boost. Carlsberg not actually declining. I was expecting to see a bit of a loss in that one, given investors were uncertain about the effect of that. But Britvic up 4.5%, 4.7% at the moment. Grifols, meanwhile, this one is halted. You mentioned that one earlier. The regulator over in Spain has halted trading on that one. They have confirmed a potential €5 billion or more bid for that from private equity and also the founding family as well. We are now going to look at Delivery Hero. I was so excited to get to that one. I got to it too early, but there it is, and it's down 17% following news of a potential antitrust fine of around €400 million for that company. They are putting a provision themselves to one side for it, so there's something that they are driving, but that one absolutely hammered today, the worst performing stock by some way today. Then in terms of some mining stocks, these ones are lower as well. A big drop in iron ore overnight of around 3%. Concern once again around the Chinese property market and also just an oversupply of that market. So we're seeing the London miners all declining today. Glencore, Rio, some decent moves lower in those ones. Critty mentioned earlier shipping stocks, once again weakness there. Now a couple of things. Critty did mention the hurricane Beryl, the impact of that is heading towards Texas, but also I've seen a note from analysts at Barclays saying they are underweight the sector, given potentially earnings have now peaked in that, given the rates might start coming down in that one. Finally, we have got a big move, and I'm going to wait till it's on the screen before I announce it this time, but it is going to be, there it is, it's Ubisoft. It's up 6%, upgraded at Jefferies. They double upgraded from sell to buy. This is the company known for its Call of Duty franchise. They reckon that's going to see a boost to earnings. They've got a €29 price target. It's trading at 20. Ubisoft up 6% this morning.
Joe, thank you so much. Joe Easton from our equities team with a roundup of all of the movers this morning. Traders and the markets are digesting the results of the French election. We will discuss that and more with the CIO of asset manager Candriam. That is live from that beautiful rooftop in Paris. That is next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Was going to keep bringing World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back to the opening trade. We're about 17 minutes and change into today's session. When you look at the French market, you are seeing some underperformance, but you're starting to see some green on the screen for the FTSE 100 and the Stock 600 as well. But again, it is that underperformance in France that we're really paying attention to, down about 0.3%, although pairing some of the losses we saw in that future story as well. When you look at the broader story, euro dollar is still at 108.30. So even though you are seeing that French underperformance in the stock market, the FX market not seeing that same margin of weakness, which brings us to the bond story as well, because when you look across the curve for those French bonds as well, you are seeing yield moves of anywhere from 4 to about 2 basis points. So again, seeing a different bit of moves in the French story as well. Yields higher, though, across the curve, I think is what you need to know. It's simply not by the margin, again, that would create a lot of comfort. Investors really figuring out where they want to go next with this investment. Speaking of, let's go to Bloomberg Daybreak anchor Tom McKenzie, who, of course, is covering the story out of Paris for us, from the politics to the markets. Tom, over to you.
Kritty, thank you very much indeed. Yes, pleased to say I'm joined now by Nicholas Forrest, CIO at asset manager Kandrim, and we talk about the pressure on French assets today. It is not dramatic, though. It is not reflecting the drama, the political drama. There is the downside pressure coming through, but it's not a significant, a huge sell-off so far across French assets, whether it's the sovereign bonds or equities. What do you make in terms of the market reaction so far, Nicolas?
So it was a big surprise, of course, because we didn't expect this outcome. But when you look at the market reaction today, it's flattish. It's flattish because I think that today investors believe that there is no clear majority for the Rassemblement National, and there is no majority also for the far left, the Front Populaire. It's just between. So what we believe and what the investors believe, Macron should find a new coalition between the center and the center left, which is not dramatic in terms of I would say the political and economic situation.
Okay, and that still remains a big if he can find that, if he can find that coalition. It's something, of course, the markets and we'll be watching very closely. In terms of the spread, then, what are you looking at in terms of the next level for the French spread, sovereign debt over their German counterparts?
Well, in fact, we know that we touched the 86 bips, I think 10 days ago. It was globally one of the maximum level that we reached since 2012, in fact. And now we believe that we will stay in a range trading between 60 and 80 bips. I think that it's possible to make a maximum and to touch, for example, 100 if there is no coalition or if the public and the program of public spending will be too important. So that's exactly what we are today monitoring, if we can break the maximum of 86, 90 bips area.
Okay, so that's what you're watching.
Yeah.
And you see that as an outside chance, but you say that it is still a risk. It's still a significant risk. It's not your base case, but in terms of that blockage in the National Assembly, the inability to form a government, that's the risk in terms of a spread above 86 basis.
So if I may, I think in a short-term basis, we don't believe that the risk is high. There is no systemic risk for France or for the European debt crisis. The question is more about medium term. Medium term because what can we expect in terms of policy with this new government? What can we expect about the deficit? And in this case, because of the political instability, because of the economic program, we can expect more spread widening.
Where does France sit then in the basket when you compare France to Italy to Spain when it comes to sovereign debt?
Well,
are we now looking at a France that belongs in the peripheral camp?
Yeah, I'm afraid that this comparison is not great for France because clearly when you compare the situation with 2012, for example, during the European debt crisis, the situation has dramatically changed. Now France has become the weak man of Europe. We really have a bad deficit, and it's close to 5.5%, quite comparable to Italy and a high level of debt. So the fact is today we can compare France to Spain or to Italy, and that's the reason why, in a medium-term basis, it's not impossible to see the spread of France going more and more closer to Italian spread.
So what would you need to see specifically to want to add French debt?
To add French debt, that's a good question. I think today, in a short-term perspective, what we need to see first is the decision about the Prime Minister, the Finance Minister. Then what about the public spending and the public deficit? What about also the excessive deficit procedure? So that's very important now to observe the Macron decisions about the Prime Minister, the Minister of Economy, and also what is the program about the deficit for 2025.
What about equities, French equities? Under pressure, we just showed a board showing the French banks feeling a little pressure in the session today. Of course, at one point, banks like BNP Paribas took a knock of around 10% on the back of that decision from Macron. Is there an opportunity to add in terms of French equities, or does the uncertainty around the National Assembly keep you with cash on the sidelines, keep you steering clear of French equities at this point?
We are not very negative about European equities, but the fact on a relative basis between US, UK and European equities, today we prefer to be more cautious about European equities, about French equities. There is no specific negative view, but on a relative basis, we believe there is more appetite for an investor, international investor, to buy UK or to buy US equities than European equities. Because it's true that there is a case for buying more European equities because of stronger growth, because of the ECB is cutting rates. But this political uncertainty could weigh on the European equities perspective.
Okay, so for now you're taking a cautious approach to European equities. You favour the UK, you favour the US for now. What are the downgrade risks for France given the uncertainty that we now face?
So you know that S&P and other rating agencies have reviewed the ratings of France for many weeks now and months. So we are not expecting a big change in 2024. But for the review of 2025, there is a risk to see a change of the outlook for France. That's, of course, it will depend on the deficit, and it will depend on the decision of the new government. Yeah.
And one of the lines that jumped out to me from one of your previous answers was describing France as the problem child, essentially, of Europe right now. And so when you're thinking about your allocation to credit, how should your investors, how should your clients be thinking about that narrative and how it layers on top of French credit? What is the risk? What is the pain point for French credit at this point?
The pain point, of course, is evolution of the 80 bond spread. If we break and if we go wider than 80 bips, it could significantly impact the credit market. But for the time being, the credit has been resilient. When you look at the credit market, the financial credit market, 81, the market reaction remains okay. And over the last 2 weeks, we saw a spread tightening. So there is no really negative impact today, but that's something that we are monitoring very carefully, obviously.
As we think about the different political combinations, in most cases, many of the combinations will lead or could lead to additional spending. There may be higher taxes.
Yeah.
There's additional spending coming through. That's additional fiscal input into the French economy. Is there an economic lift, actually, that could come through from some of these political combinations, where it's Macron and the socialists or Macron and the Republicans? Does the French economy stand to benefit, potentially?
That's a very fair and interesting question, in fact, because we have 3 scenarios today. One scenario is a far-left government and coalition, which remains and which seems to be very unlikely. Then a center-left coalition with Macron, and then a technocratic government. But what is clear for the two first scenarios, that's a scenario where we can expect more increase of tax, a review of the pension reform, and more spending. But what we can expect is potentially to have increase of tax rates, like in the UK, in fact, to partially offset more public spending. So that's a balancing act for the new government.
Okay, Nicolas, thank you very much indeed for the market take in terms of how to position, how to allocate in this uncertain French environment. Nicolas Forest, CIO at asset manager Candriam, on the problem child that France now is in terms of its European sitting, at least. Anna, Christy, back to you.
Yeah, really fascinating. Bloomberg Daybreak anchor Tom McKenzie in Paris with that important story on the rooftops. They're battling it out with the sirens, as you do when you broadcast live in Paris. Thank you, Tom, for that conversation. Really interesting about where France sits amongst other European nations when it comes to the debt story. The weak man of Europe, comparing it now with Spain and Italy, we heard there from Candriam. Chrissy, let's go to another story. We're going to be focused on the United States and US politics shortly. Interesting to see that the Prime Minister of Hungary, Viktor Orban, he's been to Kyiv, he's been to Moscow, he's been to China, he's just visiting China, and now he says he's going to Washington.
And unclear, we still haven't heard from the White House, for example, whether or not they're going to be receiving him. That is not a foregone conclusion. But in the meantime, we are getting comments coming out of the Chinese foreign ministry as well in their daily press briefing, saying that Xi and Orban discussed the Ukraine crisis, Orban's Russia visit, as well as saying that when it comes to Ukraine, they are on the same page.
And a US spokesperson last week saying they were concerned about Orban's trip to Moscow. So we'll see what he has to say when he gets to Washington. We'll be thinking about Washington next. Pressure mounts on President Biden as he vows to stay in the race for a second term. More on that next. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I'm the guy that put NATO together, the future. No one thought I could expand it. I'm the guy that shut Putin down. No one thought could happen. Who's going to be able to hold NATO together like me? If the Lord Almighty came around and said, Joe, get out of the race, I'll get out of the race. The Lord Almighty's not coming down.
President Biden speaking exclusively with ABC's George Stephanopoulos, of course, and the fallout of the debate performance that he had. Now, several Democrats really pushing for him to potentially step down. Let's talk about the likelihood of that, though. Joining us now, Leslie Vinjamuri, director of the U.S. and Americas program at Chatham House, joins us this morning. Leslie, let's walk through the likelihood of that. The odds here, despite some of the pressure that you were seeing from really both sides of the aisle, what are the odds that Joe Biden actually steps down, and in whose favor?
You know, these things are less about setting a specific odd and much more about watching a dynamic and a momentum. And what we've seen since that debate, which was only, 10 days ago, is pressure building from the public, but especially from within the Democratic Party, from members of Congress. We've seen a very significant divide amongst high-level donors in the Democratic Party. And, you know, we're told, you know, like you, we're in conversation with a number of Democrats who all feel that the Democratic Party has never been more divided than they are right now. And that in itself is a very bad sign at a time when the Democrats feel, rightly in my view, that this is a very significant election, that the choices that the American electorate face are very, very stark. And the Democrats need to be unified as they were in 2020 after South Carolina behind Joe Biden. And now it looks like that unity has been fundamentally broken and difficult to get back. Now, as members of Congress return to Washington today, there's a view that that pressure on President Biden will mount. And the question really does come down to whether he himself will change his mind and whether those people around him, his family in particular, will begin to respond to that very intense pressure.
Well, him changing his mind is just one thing, Leslie, as you know, and then the other is who the alternate candidate could be. Of course, if you look at some of the predicted polling odds, for example, or even some of the donor money, a lot of effort and thought is going on behind Kamala Harris and whether she's the right candidate to take over the nominee. But if I remember correctly, the last time around when she ran for president, her polling odds against President Trump were not that strong. Would this time be any different?
Look, again, we like to talk about polls, but the reality is the momentum will change how Kamala Harris is experienced by the electorate. If the Democratic Party were to unite behind her, that's a very big if, but if they were to do that, if President Biden were to step aside, that in and of itself would change how people see her. She would be put on the stage. She would have people around her campaigning for her. And I think the way that she's viewed would shift very rapidly. She's actually, since that debate, there in some polls, they have suggested that she is a stronger chance of defeating the former President Donald Trump than Joe Biden does. And that's before, any prospect of her actually being formally announced. So watch this dynamic that if you think just back a few weeks, the ground has already shifted very significantly. It will shift again if President Biden decides not to run. But the funders, or the high-level Democratic donors, which are absolutely essential, are divided on the question of Kamala Harris. We know, of course, that she's the obvious candidate because the funding that's already been raised by President Biden could automatically go to her. That's not the case with other candidates. And so trying at this very late date to run one of the many people whose names are in circulation, Governor Gretchen Whitmer, Governor Gavin Newsom, a newer but very up-and-coming governor in Pennsylvania, Josh Shapiro. Having a governor from a swing state, I think many people feel would be beneficial, but there's also a question of who would be the vice president on a Kamala Harris ticket. So these are all very complicated questions at a time when there is still a lot of time left, but it doesn't feel that way. The urgency around this in the run-up to the August convention is very significant.
Leslie, who are we waiting to hear from in the Democratic camp that we have not heard from yet? Are there voices that have not spoken who could move the dial on this? We've heard from President Biden himself, of course. He's clear at the moment that he wants to hang in there. Is there anybody's voice that is missing so far from the debate?
Well, there are a lot of people who have been very careful in the words that they make. Of course, we're pointing to the small but significant number of Democrats in Congress that have spoken up, but the majority of them are being much more cautious and much more careful. And again, this comes down to, what is the tipping point? At what point will so many people begin to speak up that there is a deluge of pressure on the president to make a decision? But this is a very careful calculation. People don't want to get ahead of their party. They are under pressure, many members of Congress, from a sense that they have that their electorate might be looking for an alternative. But ultimately, if you think about this, as much as so many people have suggested that they feel President Biden is too old, that doesn't mean that they're going to, on election day, switch and vote for Donald Trump. So it's really the undecided voters, the independent voters that matter. And it's also a question of whether people are driven to the polls, whether they can maintain the enthusiasm at a time when, if you think many younger voters and many Arab American voters in Michigan, for example, are already very concerned about whether President Biden is the right candidate for them.
Yes, and you have to wonder how much the global themes might overlay what is clearly very much a domestic story. Punishing incumbents seems to be something that we've seen in lots of elections so far in 2024, and also low turnout. Those could play a role, I guess. Let's look ahead to the rest of this week, Leslie, and I know there's a NATO meeting taking place, not just any NATO meeting, but celebrating 75 years of this alliance. What extra pressure will President Biden be under at this summit, given that debate performance and all of the questions around his leadership? This could be something that comes to dominate a summit that is supposed to be a show of strength.
It certainly is dominating it. Many of America's closest allies are very concerned, but it could also play to his favor if it goes well. President Biden hosting the NATO summit in Washington at a time when America has led a coalition to support Ukraine, when NATO has been absolutely critical and very successful and very cohesive. Also at a time when there's a grave question about whether support for Ukraine will continue, whether NATO will remain close, and what threat Donald Trump presents to the NATO alliance. It's a deep concern, obviously, for America's closest allies and partners. And if President Biden can turn up and demonstrate, as he did, go back to February 2022, before Russia invaded Ukraine, when the president got out in front of that, released intelligence, really rallied America's closest allies, many of whom didn't believe that that invasion would actually take place. If President Biden can really demonstrate that, that will certainly, if not change how people feel, it will delay the pressure for him to step down. That may or may not be a good thing, given how quickly the election is, the proximity to November we are.
Yeah. All right, Leslie, final question to you. I'm curious about this kind of foreign policy record, and you laid it out there well in terms of the pushback that Joe Biden is getting, especially in Michigan, for example, which is, by the way, for our international audience, a Democrat governorship and state legislature as well. But Leslie, I'm curious about what voters are going to be most sensitive to when it comes here, whether it's Kamala Harris, whether it's Gavin Newsom, even Joe Biden. No one here has a very clean foreign policy record, let alone President Trump. What do voters want to see? Very quickly.
Well, very different kinds of voters. Voters in Michigan, many of them, the Arab Americans, are concerned that President Biden and America are not putting enough pressure on Israel to exercise restraint. Whether that peace plan comes through will matter. Younger voters care about climate and climate change, and they want to see that progressive force in the White House. And neither President Biden nor President Trump come across as young, but President Biden is clearly strong on the climate agenda, which I think matters. The rest of the candidates don't have a well-known foreign policy, and this is one of the things that is very clear as you begin to think about who might come next. They're really candidates who are relatively unknown on the internet, very unknown on the international stage, and known, when they're known domestically, they're really known more for what their homegrown policies are, not for what they would do when it comes to NATO or the Middle East or climate change or China. Those are things that people would really need to understand. But those are not the issues that drive voters to the polls in the United States.
Leslie, thank you very much. Thanks for joining us. Leslie Benjamin, Director of the US and Americas Program at Chatham House. Thank you very much for joining us to talk about how President Biden is maintaining his stance around his own candidature, but also looking ahead to that NATO meeting. And with that NATO meeting in mind, interesting to see then these lines coming out from China and their foreign policy briefing this morning. So we have a NATO meeting taking place this week, of course, and China is saying NATO should stop creating tensions in Asia Pacific, and also saying that Asia doesn't need military groupings. Clearly all of this coming then ahead of that NATO gathering, 75 years of the North Atlantic Treaty Organization. Coming up, France may have dodged a far-right win, but how will Macron govern? We'll discuss that with Pascal Lamy from the Jacques Delors Institute. Markets are less moved than they were. Actually, stocks are up now. CAC 40 is up. European stocks are up. We don't see such tension in bond markets and FX markets than we did just hours ago. But we'll talk about the bigger picture with Pascal Lamy. That conversation is coming up shortly. This is Bloomberg.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S., China, Ukraine? Is it inability to pass the debt limit extension. What are you most worried about?
I think most of the time I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
We will be in a position to have an absolute majority, maybe in a year. France is going to be totally deadlocked, with 3 groups of roughly equal size in the National Assembly. So that's the way to go. It's unfortunate we will lose another year, but if that's what it takes, well, then that's what it takes.
The majority has made a different choice for the country. From now on, the will of the people must be strictly respected. From now on, no subterfuge, arrangement, or combination will be acceptable. The lessons of the vote are irrefutable. The defeat of the President of the Republic and his coalition is clearly confirmed.
Ce soir, la formation politique.
Tonight, the political faction I represented in this campaign, even though it performed 3 times better than predicted in the last weeks, did not attain a majority.
Ainsi,
thus, loyal to the Republican tradition and in tune with my principles, I will hand the President of the Republic my resignation tomorrow morning.
Just some of the political voices reacting to the surprise results in the French election. Not a surprise that we end up in a hung parliament situation, but a surprise that perhaps the largest party is going to, or the largest parties grouping is going to be from the far left. So we'll see how that plays out. We'll be watching very closely who is picked as a prime minister before we even get to that point, what conversations are had between the parties, what kind of government can be put together here. We'll have more conversation about that in just a moment, but a quick check on French assets. The CAC 40 now in positive territory. Stock 600 also gaining, up by 0.3%. French stocks then didn't linger long in the red. The French 10-year yield entirely flat now. So compared to Friday's close, we saw that yield moving quite considerably on Friday. Yields coming down. This morning, we saw those yields jumping out of the gates 46 minutes, no, more than an hour ago, in fact. But that didn't last for long, and now we're back to the flat line. In terms of the euro, we're pretty flat there now as well. And this is French stocks for you. We've got a host of French stocks still in the red, some of them still responding to what's going on politically over in Paris. But I can say on the CAC 40, we don't have all that many stocks, maybe 10 or so in negative territory, the rest in positive territory. Joining us now with his perspective on the French political scene, Pascal Lamy, coordinator of the Jacques Delors Institute in Paris, Berlin and Brussels, and former Director General of the World Trade Organization, of course. Pascal, thank you so much for joining us. What is your assessment of the likely outcome here as we no doubt go into a period of volatility where different parties in Paris talk to each other about what kind of coalition perhaps can be brought together? What are you expecting to see?
Well, I think you've properly characterized the situation. No outright majority,
as expected, so a hung parliament, but a different balance than expected among the three dominant groups, as left and center are ahead of the extreme right in a number of seats. So some sort of coalition between the left and the center will probably be necessary to support a government. But of course, the contours of this possible majority are still very uncertain, not least because the left is a coalition of parties who may not agree on everything, and that is the same for the center. So we are in for a period of political uncertainty, and in this sense, France is a bit like other European countries who have a parliamentary system. So after elections, it takes time to find a coalition able to support the government, but France remains a presidential election-based regime. So the big question mark, which is what will happen in 2027 at the next presidential election, remains wide open, and this is uncertainty.
Yes. I mean, before we get there, we just heard from Marine Le Pen and some of her comments last night. She was saying she was taking a positive view of what some would see as a worse than anticipated outcome for her party, but she was taking a positive view and saying that they will have a majority in a year, perhaps because she thinks that will be forced, the president will be forced to call another election within a year. Would you expect us to end up in further parliamentary elections in a year, Pascal?
I think the President of the Republic will try to avoid this and try to build a coalition that will last until 2027, which is the next presidential election. But it is true that although the extreme right did 10 million votes, which is much more than the left, which did 7 million, there has been a clear rejection by roughly 2/3 of the French electorate of a extreme right-led government. So this is a lesson for the future, although the alternative is not yet clear. And we will see in the coming month whether Macron gamble, which was to call these snap elections after the defeat of his party in the European elections, will have paid or not. I think for the moment the jury is out.
Well, Pascal, how long does this show up before this shows up in actual policy implications? Things like the tax agenda from the left, or for example, or trade deals. When can we expect those early signs to actually show up in the way that France not only governs, but shows up in its finances?
Well, France will be governed because we have, as I just said, a presidential system plus a parliamentary government. So France will be governed, no doubt about that. We are not in a situation like a full parliamentary system where as long as you don't have a majority in parliament, there is no government. But the direction of the main policies in France will remain unknown until we have this coalition. It's likely to be more left than what we had so far, although the move to the left, in my view, will be limited by the high budget deficit and the high public debt which France has. So my expectation is a limited shift to the left. Then this will create a new field for the parliamentary elections that will accompany the next presidential election. So far, there is a coalition. The new numbers show that a coalition between the extreme right and the extreme left to vote down a government would not be sufficient, which would provide with a margin of stability for the 3 years to come.
So Pascal, you walked us through kind of the implications for the deficit and the economics and the policy agenda as well. I'm curious what this means for France on the more international stage or on the broader European stage as well. For the markets, we've heard it being compared to, from a fiscal point of view, the likes of Spain, Italy, for example. One guest this morning even calling it the weak man of Europe. I'm curious how that affects its ability to negotiate on the international stage.
That's a good question. I think, at least from my side, from my view, the good news of yesterday's elections is that there will be no change in the French push for more European integration. This has been the policy of the French president so far. The likely possible coalition will be a pro-European coalition. So on this, there is no change. And in this sense, the international, European and international stance of France will likely not change, which again, for many of us is good news, although again, 1/3 of the French electorate voted for an extreme right party, which shows that there are issues, problems, frustrations, miscontent under this reality, which clearly need to be addressed.
Pascal, thank you so much for joining us. Pascal Lamy, coordinator of the Jacques Delors Institutes in Paris, Berlin and Brussels, and former Director General of the World Trade Organization. A quick check on French assets then for you. When we do see some recovery in French stocks, just as we see stocks elsewhere moving higher in Europe, the euro is pretty flat, yields pretty flat then, Chrissy. I think it's really interesting to think about how this plays out and to what extent bond markets are in charge here and setting limits about what happens, because you could argue bond markets should be nervous about the left, but on the other hand, post what we saw with Liz Truss in the UK, the argument from some in the bond markets is that actually bond markets are more in charge than they used to be because they showed the power and influence that they can have, okay, in a different geography, but perhaps that has stuck.
Yeah, it's an interesting one as well, because so many people were, I think, expecting a more violent reaction, and we actually didn't see that, to the point that it actually brought up the topic of ECB intervention, for example, and yet guest after guest is saying this is not a realistic one, even, however, perhaps in the context of the pushback we got out of Germany as well. But I think to echo the words of Mark Cudmore, this is still a longer-term story, right? We're still talking about the deficit, and that is still kind of a runaway train at the moment.
We heard that from Candriam, didn't we? Talking to Tom McKenzie on that beautiful rooftop. Lovely to see that sunshine. But the Candriam guest was saying that France is the weak man of Europe, comparing it now to Spain and Italy in terms of bond markets, saying in the short term there is risk, but it's actually the medium-term risk that he's more focused on, and that is around policy and the deficit and the potential for more spread widening.
Yeah, we're seeing that. It certainly has been a long couple of weeks. I feel like this is our sixth election or something in 30 days. But you're already starting to see that price in the market. My question is, when is it going to show up in the FX market as well? Euro dollar 108.34 is where we're at. Equity markets making a bit of a rebound. That does it for the opening trade. The pulse is up next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Paris with the latest on the elections. France set for political gridlock after a surprise win by a left-wing coalition in this weekend's legislative election. Well, pollster had seen Marine Le Pen's national rally winning the most seats, but the far-right party came third behind President Emmanuel Macron's Centre Alliance.
The majority has made a different choice for the country. From now on, the will of the people must be strictly respected. From now on, no subterfuge, arrangement, or combination will be acceptable. The lessons of the vote are irrefutable. The defeat of the President of the Republic and his coalition is clearly confirmed.
We will be in a position to have an absolute majority, maybe in a year. France is going to be totally deadlocked, with three groups of roughly equal size in the National Assembly. So that's the way to go. It's unfortunate we will lose another year, but if that's what it takes, well, then that's what it takes.
Let's go straight to the markets to see the initial reaction. Now, they've zigzagged a little bit. French markets seem to have erased some of the initial losses. Again, I guess investors now looking at or speculating that the lack of a clear majority in the election means that the next government will have to compromise, which will keep the extreme policies off the table. So we're seeing a little bit of a lift for the CAC 40. Nothing huge, nothing to write home about, but it's still getting some 0.4%. The 10-year 3.226. I think there's another argument that would say if we have political gridlock and actually not much happening with a very difficult budget, sure, we're going to see maybe not much in terms of fiscal policy, but you could see also a lot of riots and a lot of indecision that could lead to actually, France being blocked for a couple of years. So let's discuss this further with Marie-Jacques Cardoen, French Chief Executive at Edmond de Rothschild Asset Management, and Ludovic Subran, Chief Economist at Allianz. So thank you both for joining us. So I guess there's a bit of relief from the markets. There's maybe a bit of relief from some people in the French population that the far right didn't go ahead. But fiscally, we don't really know what this new government will do, Marie.
That's right. I think we've, as you said, Francine, we've depriced the extremes clearly yesterday night, and there is still a big surprise in the market this morning that the left has managed to get literally shoulder to shoulder with the political party from Macron and the Rassemblement National. I think the outcome is unclear in terms of how to govern in an environment that's so close to each other, and that means for investors probably a lot of uncertainty and a lack of clarity in the coming month as the coalition is starting to, I guess, execute what they can execute.
Yeah, and Ludovic, I mean, this is not France, this is not Italy, sorry, this is not, you know, France is not used to building these big, they're not used to building these big coalitions. And if you look at, you know, this left movement, I mean, if they implement their program, it's 96 billion euros a year, 6 times what Macron wanted to spend.
Yeah, but that's the good news, right? That's why we get a muted reactions on market. They won't be able to implement their program, right? Because there is nuisance power everywhere, from the president to the Senate.
But there will be concessions.
There will be compromises. And the question is whether we are ripe for coalition building, or whether we need to, you know, the left needs to think which political figure do they want to put forward that is compatible with the centrist party, which is still a third of the parliament, or close to a third, yeah.
I mean, if we don't have a government before September, what does that mean for markets? Will they be looking for a kind of, you know, a base? Do they stay tranquille, as the French would say, because there's no huge concern, or are they going to start being concerned?
So what we expect is clearly a bit of a standstill, probably spread widening a bit more. We see the OAT bond at 65 bips right now. We expect the range to be between 65 and 80. So I guess midterm it means France will go from core to semi-core status, potentially, but we expect that this is going to, on the equity premium side, this is going to remain a local event, and it's not going to impact Europe more broadly that much.
So, Ludovic, can we be certain that the left will actually play a role, a significant role in this government? And again, even if they abandon most of their pledges, there'll be some kind of, you know, pressure to give back to workers, to increase the minimum wage. I mean, they're not going to go into power and saying, forget the agenda that we put forward.
Sure, but remember, you know, before the elections, France had to adjust 100 billion, the fiscal deficit. That's the promise they made to Brussels. And when was the last government that adjusted by a point of GDP of fiscal deficit a year? Was François Hollande, 2011, 2016, right? So I don't think the left is as profligate as one would say. There is a faction of the left which is a bit crazy, and we need to, you know, peel them off. But then there is a center-left government that has not done only bad things when it comes to managing deficits. So I'm very much, you know, in line with Marie on the idea that there is a model through for the French risk premium. So it's not disappearing, it's not a buy the dip type of moment, but it's not a very contagious or a very risky, you know, situation for the French risk premium. And so that's good, as long as we don't test institutions. Because remember, September, the Commission comes back and say, we have your debt sustainability analysis for you, and so you need to promise that you're going to do what you promised just before. And promise you promise is not what's going to happen with this type of technocratic or hung parliament situation.
But Ludovic, I mean, how difficult is it to peel off the far left, given they've just signed a coalition agreement? So you can't, I mean, how difficult is it going to be to tear that document and say, look, actually, we're going to bed with the centrists because we want to be in power for the center left?
It's very complicated because it's an electoral cartel, right? So they have to re-look again at what they signed and see which party is really on top. The good news is that LFI, which is this, you know, leftist left faction, there are only half of the votes on that side. So the other half could unite and then find a form of coalition. Macron has to change method. You know, his people have to change method. This morning when we woke up, it was all about, we're not going to come back on the 60-year-old pension. The other were like, we're not going to come back on indexing salaries on inflation. If you start this way, maybe I'm very German, you know, but that's not how you build a coalition agreement, right? You have to actually look at compromise, and this is really not very French, clearly.
I mean, the problem is that you're just not used to it, right? The French are just not used to building coalitions. And so if there's a lot of noise, if there's a lot of, you know, concerns, if there's mudslinging, will that give a little bit of an advantage to Le Pen's party as we go into 2025?
Potentially, and we see that, you know, the risk is potentially over 1 year, in fact, that we're going to have re-election in 12 months' time. I think in between, it's going to be a lot of back and forth. As you said, Ludovic, I mean, it's the left wing is also a relatively unlikely alliance, if you like, from very different streams of thought. And there's only a 14 seats difference between the Rassemblement National and the new Front Populaire. So very tight, and will probably lead to you know, very I mean, a lot of discussion, a lot of need for negotiation, and clearly, as you said, Francine, we're not used to governing like that in France, so a learning curve.
Is there, Marie, a risk that actually some of the reforms put in place by Emmanuel Macron to be more market-friendly will be rolled back with the new Prime Minister?
The risk exists, and look, I mean, I think there is, however, one point to bear in mind is that the new Front Populaire is a European party, and of all of them, it's probably the one that has put Europe the most in front of their program. So that's a positive. I think in terms of how market will read the situation, I think they're going to expect that it will take time to form a coalition because it's taken time for Germany, it's taken a lot of time for Belgium, so and we are clearly going to have to find our feet. I think in terms of allocation, there's a big question for investors today. How are we going to navigate the summer? And it's probably through allocation to US, UK, German sovereign debt, we would say, and then there will be entry points, both in credit and in equities, and we think that is going to be a great opportunity to go back to emerging markets. We're waiting for a rate cut from the Fed in the US, so that should impulse potentially new allocation, and so we believe that would be good from an investment perspective.
So you have the markets, and then you have productivity, you have foreign direct investment coming to this country. Will that be at a standstill before the political situation is a little bit clearer?
Yeah, I mean that's the big decision that Macron took by dissolving the parliament. There is no upside, and so I do think that we're going to see less attractiveness for France. We're going to see a bit more credit risk. We were already at a record high in insolvencies in the construction sector, and it's true that it's going to be about confidence. Remember, this country has close to 18% savings rates. So if you want to grow in the second half with a bit less inflation, a bit more wages, and a bit less cost of interest rate, you need confidence, confidence, confidence. That doesn't inspire confidence, right? So precautionary savings may be higher, and so that may be taking a toll on growth and maybe making the fiscal adjustment even more complicated. So that's a difficult H2, but it's not catastrophic, and I think this is really the message we need to give. It's not as bad as it is. It is just about being patient with France. Marie talked about being collaborative and being pro-European. Investors, partners, institutions need to be patient with France. And remember, we have to stick together because whatever will come from the US in November may not be as nice as one would like. Yeah.
So what are the chances of a technocratic government, someone actually being appointed that's outside the political sphere, kind of, what Italy did with Draghi or Mario Monti?
It's complicated in France, but I see something that is a mix of technocrats and politics, that are from the left to the right. I really think this is possible. So I don't think a pure technocratic would work, but I do think that till September, we may have Gabriel Attal as Prime Minister because we need to basically go over the Olympics and make sure we are ready to, call for a parliament that is going to be very explosive in September.
I think also traders are trying to figure out some of the legalities, right? For example, I think Emmanuel Macron had promised a lot of Mirage or a lot of the weapons to Ukraine. With a new government, that needs to be actually signed for by the finance minister and by the defense minister. Things like that. Are we going to see a president that is so frustrated by not being able to be in charge anymore that at some point he'll step down as president?
Absolutely a possibility, and it would be very interesting to see how he is going to be able to govern going forward. I think the big scare from the market is whether the government is going to use decrees to govern in the next months, because that's something that tends to scare markets. So we're going to have to observe. I think for the time being, we're very much in a wait-and-see mode, but things will unfold hopefully quite quickly. And
thank you both for joining us today. That was Marie Jacot, France Chief Executive at Edmond de Rothschild Asset Management, and Ludovic Subran, Chief Economist at Allianz. Coming up, we'll talk a lot more about the U.S. as Joe Biden doubles down after more House Democrats call for him to step aside. We'll have more on that story next, and this is Bloomberg.
multi-trillion-dollar industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
I'm the guy that put NATO together, the future. No one thought I could expand it. I'm the guy that shoved Putin down. No one thought could happen. Who's going to be able to hold NATO together like me? If the Lord Almighty came down and said, Joe, get out of the race, I'll get out of the race. The Lord Almighty's not coming down.
Well, that was the U.S. President Joe Biden. They're speaking exclusively to ABC's George Stephanopoulos. His comments comes as an increasing number of House Democrats call for him to step aside. Now, for more on all of this, let's bring in Bloomberg's EMEA News Director, Rosalind Matheson, who's also in Paris, part of course, the electoral coverage, but she understands U.S. politics like no one else. Ros, I mean, it looks like, you know, despite a pretty poor performance, even in this interview, Joe Biden is going nowhere.
Well, that's right. You saw quite a sense of defiance from him, if anything, in this interview, and certainly a sense that he feels that he ran against Donald Trump the first time because only he could defeat Donald Trump. And that's the message he said. He's convinced himself again that only he can take on Donald Trump a second time and only he can defeat him because of his many years of experience as a politician. Of course, Joe Biden has been in politics for decades. He's a very seasoned, experienced politician. But at the same time, that sense of defiance that he's able to show the durability that's needed to not just campaign against Donald Trump, but win against him and then be president for another 4 years. So again, even as we're seeing more and more Democrat lawmakers, you know, privately say, should he look at stepping aside? Does he need to drop out? And that narrative is certainly not going away and will just increase potentially into this week, that Joe Biden is saying for now he's got no intention of going anywhere.
But Roz, if he doesn't step down, can the Democrats actually kick him out, or is that almost impossible? And would it look really bad? What are the polls saying? If an election were to happen tomorrow in the U.S., is it a definite Trump president?
Well, interestingly enough, a poll that we recently did showed that in some swing states, Joe Biden's not doing that badly. Overall, on a national level, he is polling under Donald Trump, and his Vice President, Kamala Harris, is in fact polling better than he is in the idea of a head-to-head contest with Donald Trump. So he's not trailing that badly in some swing states. But again, you have that question, is there going to be another gaffe? Is there going to be another misstep on the campaign trail? Are we going to see that show up more and more? And if you're going to make a decision about Joe Biden as your candidate, as your president, does that need to be taken now before we get too close to the November election? And so you can imagine a scenario where more Democrat lawmakers say that they feel he needs to step aside. At some point, do they put their names publicly to a letter saying that he has to do so? And at that point, does his position become untenable?
Rose, thank you so much, as always. Bloomberg's EMEA News Director, Rosalind Matheson. Now, still with us, Ludovic Subran, Chief Economist at Allianz. Ludovic, I mean, no matter how much, concern we have on any European election, frankly, the U.S. is the bigger one because it's more important to the world as a whole on tariffs. But I don't know. I mean, is there any way of pricing what Joe Biden staying on as Democratic candidate does for his chances of winning?
I do believe that markets will reposition, for example, their inflation costs, so the inflation expectations, because remember, if Trump has an edge, it means he's the triple whammy of inflation, which will be very bad for Europe, by the way. He promised to deport 7.7 people living on American soil. He promised tariffs to, go back to the 70s. And he's someone who has been discrediting the Fed over and over again. So I think we're going to see if markets are repositioning themselves for a Trump large win. which would be quite catastrophic for the US because there would be a boom-bust type of scenario with over-tightening risks rising and the Fed not being able to cut at all in 25. But that would be dramatic for Europe. Can you imagine with the situation we have now to have the US, you know, this divergence in the financial cycle and this risk of capital flight to the US and then the recession to re-import back in a year from now? That's really sad for the world. Trump may be good for America short term, but it will be certainly negative midterm for Europe and for America.
So how do you position ahead of that? I mean, do you wait until November? Because still, again, November, this is such a long election cycle. And frankly, because of the candidate's age, anything could happen.
You know, I think tactically the dollar is going to get stronger. Tactically also the US equity market is going to get stronger because everybody expects Biden to go with his Super Bowl of tax. But I think very clearly towards the second half of 24, and then when Trump gets back to the White House, people need to ask themselves how much overheating can the US economy sustain? And so that's when you're going to have to unwind and, you know, unbuckle your positions. And I think for us, for example, we're going to be very critical and scrutinizing of the credit cycle in the US, which has been doing very good, right? There's no lending, you know, fueled by fiscal policy. We don't know how this could play in 2025 with someone who could be quite erratic at the helm of that. You know?
Ludovic, when do you see a Fed cut? Again, we saw unemployment creep up a little bit. I don't know whether at some point they actually lose that narrative.
We have a first Fed cut in December, mostly because of the political nuisance it could cause to have a Fed cut in September, just before the election, or 3 days after the election, right? The FOMC meeting is really 3 days after. So we push it down to December, a bit a la Bank of England. You know, we don't want to get involved, but somehow we are not independent, so we have to do something. But to be fair, I think it's time. I think the latest numbers in the US showed that there is time to cut for the US, not for the Fed not to be a laggard. And that would be quite dramatic for the jobs sector in the US for sure.
And so does that reignite the animal spirits of the US, which have been extremely strong, and then a little bit of question marks because the Fed hasn't cut yet?
I don't think it's enough. You know, I think what's going to matter is, you know, can the Fed deliver 5 rate cuts in 25? Where is the terminal rate in the US? And markets are currently pricing a terminal rate that is far too high given the growth momentum in the US. So the real question is there an inflection and a real loosening cycle? Only Biden can deliver that. I don't think Trump can deliver any loosening cycle. So that would be quite surprising for the markets.
Ludovic, thank you so much for joining us. That was Ludovic Subran there, Chief Economist at Allianz. Plenty more ahead. Stay with us. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest premieres Monday at 9 a.m. Eastern, only on Bloomberg Television.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Naqua here in Paris. Now, Iran has elected a reformist president keen on restarting talks with the U.S. over a landmark nuclear deal. Masoud Pezeshkian, a 69-year-old heart surgeon, beat his hardline rival by almost 3 million votes in a runoff. Turnout was just under 50%, one of the lowest ever recorded for a presidential vote, while Pezeshkian's challenges include the handling of Iran's conflict with Israel. On to corporate news and Paramount. The parent company of CBS and MTV has agreed to merge with Skydance Media, ending one of the messiest and most dramatic mergers in recent history. Now, the deal hands control of a major Hollywood studio to independent producer David Ellison and marks an abrupt turnaround after talks collapsed last month. Boeing has agreed to plead guilty to criminal conspiracy to defraud the U.S. Now, that's after the Justice Department concluded that the plane maker failed to adhere to an earlier settlement stemming from 2 fatal crashes of its 737 MAX jetliner. Under the agreement, Boeing faces a criminal fine of as much as $487 million. The plane maker will also install a corporate monitor. Now, a couple of things when it comes to French assets. Now, French markets definitely seem to have erased some of the earlier concerns. Investors really speculating that the lack of a clear majority in the election now means that the next government will have to compromise, which should be able to, keep the most extreme policies off the table. So on the back of that, you see the CAC 40 gaining some 0.7%. More from Paris and the Eiffel Tower shortly. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in Paris. Now, France is set for political gridlock after a surprise win by a left-wing coalition in this weekend's legislative election. Now, pollsters had seen Marine Le Pen's national rally winning the most seats, but the far-right party came third behind President Emmanuel Macron's centrist alliance. So let's discuss all of this with Sébastien Lay, an economist from the Alliance Républicain and National Rally, and Eleonore Carrois, a re-elected MP for the Renaissance Party. So thank you both for joining us. I mean, it's been quite a whirlwind. I think the markets are breathing a sigh of relief without maybe realizing the hard work that then goes into finding a government and coalition. You know, how much gridlock are you expecting?
Look, I think this is a very unexpected situation for France, and I am also relieved and breathing again because this has been a terrible 3 weeks. Right now, what we see is that a majority of MPs that are willing to work together have been elected. You still have extremes. You still have MPs with whom we will not be able to work. But I am confident that there will be a way and that we will be able to form a bloc with, of course, differences. We will agree that we disagree on certain things, but there will be priorities and we will move forward because we have no other option.
Yeah, I mean, it's true there's very little other option than move forward and find the government. How quickly can that happen?
Yeah, I mean, given the tricks, arrangements, and political shenanigans between the two rounds, on my side, I've known for a while that we couldn't get victory this time. But we got, if you look at the popular votes, 37.5% of popular votes. So I think victory is only postponed. Now we have a hung parliament.
Victory, what, for the presidential election?
For my cap,
Marine Le Pen?
yeah, exactly. Or for the next snap election, let's say in 1 year. I
think there'll be something in 12 months?
Yeah, I think it will happen. If it's not the case, it's going to be 2027. So the tide is rising. So we see. Now, in terms of a hung parliament, we know this is not in the French political culture, but I think we can get used to. I think the weird thing compared to other European countries is that we're going to have a hung parliament, a political gridlock, in a nation with strained finances and a procedure, a scrutiny from Brussels for excessive deficit. That's my main worry. We're going to see. I mean, I don't think that the markets are really understanding the situation today. It's going to take a couple of weeks before we can really structure that government and the smoke from the political fog can really clear out.
I mean, I guess that the market is seeing a hung parliament as not much spending because actually there's gridlock, and so that's what they're liking at the moment. Who do you think will be in that coalition?
I think there will be MPs from the center and also from the reasonable right and reasonable left. And I think that's something that the markets have understood, that there will be a compromise, and a compromise means no excessive spending, no excessive decisions. It means there will not be Jean-Luc Mélenchon in power, which I think is a clear relief, but there will also not be Marine Le Pen and her party in power because they are also completely incompetent and incapable of putting this country forward in terms of our economy. So right now the decisions will be narrower. The space for making them will be narrower, that's for sure. It will be tough making those decisions and those discussions. That is also clear. But I think all in all, this is the best scenario we could have had given the circumstances when you think of what happened three weeks ago.
I mean, the market was certainly a little bit nervous 3 weeks ago. I mean, Italy has, a long history of trying to find coalitions, and Italy at some point also could not find a government, so found technocrats, someone who's apolitical to be head of the government. Do you think that could happen in France? Would your party support that?
That's another solution that I would probably, support it as far as I am concerned, because if you have a technocratic government, probably for public spending, not that you're going to cut spending, which is what France really needs at the moment, but at least you won't have a kind of profligate spending that you would have, with a leftist government, I don't think it's, tradition, but I think we should try.
But your party also wanted to spend. I mean, you weren't.
Well, no, if you look at the economic program that I eventually endorsed, in the last weeks, that was really a classic conservative, fiscally conservative program, with cutting public spending and cutting taxes. So it was cutting consumption taxes, production taxes, but all financed, by a reduction in public spending. So it wasn't that clear 6 months ago, I agree with you, but over the last month, and especially with the alliance with the Republicans, that was really clear.
Yeah, I mean, I think if you look at the numbers, I think it was, the left coalition wanted to spend 6 times what Macron, but your party also wanted to spend 2 times. So maybe you balance the books in other ways, but there was always a lot of questions about fiscal spending, right?
Not with the compromise that we reached in the last 2 weeks. So I think maybe the markets, had a misconception of both the National Rally Program and the Front Popular Program. And I think over the last weeks, they just reacted to political chaos and uncertainty. And today, they are kind of reassured because the situation is not clear. So we're going to have to wait for a couple of more weeks.
Does Emmanuel Macron stay on as president until 2027?
That's what he said, and I think that would create stability because that's the role of a president. I think you have to give more space to the government and more space to the parliament as it is recomposed. And that is also something that is positive because, again, we'll have compromise, we will have decisions that are concerted, and you will have an opposition that will be reduced to the extremes and not everyone being in a constant opposition, threatening the government of taking it down for any decision or any, political proposal.
I mean, again, the concern is that actually he's used to governing, he's used to putting things in place. That's also the role of the president. If he were to send, for example, weapons to Ukraine, it has to be, signed by the defense minister and the finance minister. If they start saying no, does he just get up and walk?
Well, we've had that in France, right? We've had what we call la cohabitation, and it is tough, but it works. So eventually there will have to be a government. That government will definitely be more independent than the present government from the president. And there will also be a discussion at that level, not only at the parliamentary level, but also at the executive level, which I think, again, can only give a good result.
Who do you think the next prime minister is?
I think it's going to be someone from the center left, so Raphael Glucksmann or Marine Tondelier. I don't think it's going to take someone from France and Embark, But to get back to your question, I think the main point is not the parliament, it's Emmanuel Macron's personality, Can he deal with compromise? We don't know. Maybe he will, or maybe he will just resign. That's still a possibility over the next 12 months.
You don't think that's a possibility?
No, I don't think he will. I don't think there's a reason for him to resign now. I think he acknowledge the fact that the country needed a change. We've had this, flash election. It was extremely intense and rapid, and we have the parliament that is the most representative of the different views with the most parties that are representative, and now is what do we do with this? And I think it is extremely important that we take the France Unbound, the LFI, out of any government because they are clearly radical. And I think it's also important that we obviously do not make any sort of alliance with a party that has shown that it is incapable of being clear and standing clear on the economy, but also on most of the topics, which is the Marine Le Pen's party. So right now we have avoided those two extremes, and now it's how do we recompose with what we have.
I mean, do you have a chance at the presidency in 2027?
Yeah,
again,
I think so.
And what are the steps towards that?
Yeah, I think the tide is rising. I mean, it could be also that we could get a snap election in 12 months, and we could have another cohabitation. So it's 2 options. Either we just postpone victory by 1 year or by 3 years. We'll see. It would be better, obviously, to get both, given the French system, the presidency and the parliament. But we were ready to go to Matignon, a couple of days ago. We will still be ready in 12 months,
Do you think Marine Le Pen personally is taking this as a defeat?
No, I don't think so. She mentioned yesterday, and I was with her, that the tide was really rising. Again, you look at the numbers, more than 10 million voters, 37.5% of all votes. It's unprecedented, in French history. It's just the institutional system that is blocking us, and we knew it. We are playing by the rules, we are dealing with that. So we have to accept the system and try again. That's called democracy.
Yeah, I mean, there's been a lot of questions about, also not fully understanding what you stand for, because it's been watered down so much. So do you think there will be a reassessment of the campaign that Jordan Bardella put in place?
No, I think it was the right trend. There was also this alliance with some Republicans like me, I'm an economist, I'm rather a pro-business economist. Maybe, 5 years ago, I would have never done this alliance with a national rally. So that's an evidence, that they move a little bit on the political spectrum, and I think this is the right positioning. This is very similar to the Republicans in the U.S. or the right now in Italy or in many countries. That's all the new rights. Pretty much we have the same positioning. We're not that different now from Trump or Meloni.
Disagree,
yeah.
That's my vision. That's my vision. Why I joined this alliance, and this is an alliance that I'm forging myself with other people. And now we have more time, so we're going to be even more ready, in 12 months. Because this time we had only 1 month. Personally, I had never ran for an election before. I had to decide going for this election in 2 days. That was just like launching a new startup, But now I have the time. I have at least 11 months to get ready.
I mean, many French really, say that it's very difficult to change the party. But talk to me a little bit about what party. I mean, the role of France in Europe. How much has it been weakened? It feels like now it's Italy, maybe Poland, and other Eastern countries that have more of a say in Europe.
I disagree with that because it is France that put together all the European presidents and MPs to decide to continue helping Ukraine. It is France that has also taken the lead on many European topics. This was a difficult time, and it still is and will be for a little time. But going back to what you were saying, I was shocked by the Républicains and the National Rally Alliance, because for me, the National Rally Alliance is a very protectionist party that has more of a leftist sort of a economical project that is against every free trade agreement, and that is totally opposed.
I am a protectionist, I'm a pro-business economist, but also a protectionist.
Okay.
I'm a Trumpist when it comes to economies.
Okay. Well,
I'm perfectly aligned with Arthur Laffer, all these people in the U.S. So, like I said, it's just a normalization of the right in France.
Yeah. Would you call Marine Le Pen's party far right?
It's the new right for me. So the question is, do you call far right Donald Trump or Meloni or everyone? So where's the right in the United States? It's the Republican Party. It's the right. So what is the political cleavage? Is it between the left and the right, or do you invent something new, the left and the far right? So where is the right in the U.S.? I'm an American citizen too. I vote in the U.S. The right is the right. It's Donald Trump. It's the evolution of the right.
Does this actually change politics in France forever? If you start looking at coalitions and the way the negotiations, I guess in the next couple of months, will then set the stage for further years.
Yes, it does change the politics, but the recent politics, because traditionally in the past republics, we were a parliamentary republic. It was very unstable. We have a very bad image of what was the Fourth Republic, because of course that led to several elections and to certain instability. But it was also a different time, and I think giving more power to the parliament and being more represented with different parties that are within power and not in opposition, that makes them more responsible. Because for me, the reason the Marine Le Pen's parties has risen, it's also because the rest of the opposition were so disruptive, so vocal, that they were there quiet, not saying anything, changing their mind every second about Brexit, about the economy.
But we've seen many liberal democracies. I'm thinking of Germany, I'm thinking of Italy, where actually these coalitions are hard, especially if you have a rainbow coalition with like 4 or 5 parties. It's really like an art to keep it going and get something through. Otherwise, you could have absolutely nothing done for the economy for years.
It is difficult, but it is doable. And I think when you look at our neighbors, although, for instance, Belgium, that was blocked for so long, they're moving forward. And I hope we don't get to that point where we're blocked for so long, but eventually we will move forward. And we don't have these irresponsible oppositions on two sides. And believe me, for seating in the Assemblée for the past 2 years, that is going to be a relief.
Thank you both for joining us. That was Sébastien Lay, an economist from the Alliance Républicaine National Rally, and Eleonore Carrois, a member of the Renaissance Party. Now, coming up, we'll have plenty more throughout the day. We also look at the UK. Rachel Reeves says growth is the UK's national mission, so we'll have a preview on her first speech as Chancellor of the Exchequer for you. That's next, and this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Thank you.
The UK has a Labour Prime Minister for the first time in 14 years, and a female Chancellor for the first time ever. But who are Keir Starmer and Rachel Reeves? Keir Starmer's only been an MP since 2015. Prior to that, he was a lawyer, rising to become the top prosecutor in England and Wales. He joined the former Labour leader Jeremy Corbyn's shadow cabinet, appointed the shadow Brexit secretary in 2016. He took over the leadership in 2020, following Labour's crushing defeat at the hands of Boris Johnson. He spent the last 4 years pulling Labour back to the centre ground. Rachel Reeves is a former Bank of England economist. She's been on something of a charm offensive to win over business and the city, both of which are traditionally seen as more friendly to Britain's Conservatives. Her model rests on a blend of self-reliance in key areas such as energy, while seeking to reduce trade barriers. Plans include a new publicly owned energy company, closing tax loopholes for the wealthy and ending exemptions for private schools. Still, Britain is struggling to grow and has a massive debt hangover. That's the inheritance Starmer and Reeves will be facing, which could well tie their hands in the next Parliament.
Now, for more on all of this, we're joined by Bloomberg's Adam Blenford. Adam, what's the prescription for the next couple of months? It's very difficult to attain that 2.5% growth that Keir Starmer's promised.
Absolutely. Good morning, Francine. The effort to try and achieve that really kicks off this morning. Rachel Reeves is due in an hour, less than an hour perhaps, to speak at the Treasury. And she's going to try and put some flesh on the bones of that pledge/promise to try and raise Britain's growth to 2.5%. Projections currently showing that the UK is on course in coming years to be considerably under that. So there's a big challenge there, and long-running issues in the UK economy, for example, low productivity causing a drag on the economy. Two of those things that she's hoping to feature in there to drive that growth might be private investment, and there's been a lot of focus and a lot of attention on how they might open up the opportunities for the markets to kind of kickstart some of, for example, renewable and green energy, and equally planning. The Labour Party, the Labour government, indeed now wants to liberalise Britain's planning rules, kickstart a very large wave of house building, which was something that the Conservatives didn't manage to get done, and that would obviously stimulate those sectors and bring in a lot of investment. But there's lots of roadblocks on the way before they can do that, and we'll be eagerly waiting to see what Rachel Reeves thinks that she can do from the outset.
Adam, thank you so much. Adam Blenford there with the very latest, of course, on the first speech by Rachel Reeves and some of the way forward. Coming up, a surprise win for France's Left Alliance in the legislative elections. We take a look at where this leaves Parliament and the market. That's next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Well, the euro has pared losses following the results from France's legislative elections, while French stocks also trading in the green this morning. So let's get more from Bloomberg's Chad Thomas, who runs, of course, our government coverage. Chad, we're here in full force. We send a Bloomberg team to try and understand the numbers. We're crunching numbers. We're understanding fiscal positions. Like, what do you see as most problematic? The markets seem to be looking through this because they think, look, Hong Parliament, nothing bad can happen fiscally. The reality is somewhat different.
Well, the reality is we have gridlock, first of all. And second of all, Macron, if he's going to try to form a government, he doesn't have it in the center with his own parties. It's, as you say, split by thirds, 3 different groups. So he's going to have to move to the left. And moving to the left means he's going to have to abandon some of the reform policies that he's been pursuing, maybe have to roll some of them back. And he's probably going to have to spend a little bit of money. And there isn't much wiggle room for France. France is already exceeding the budgetary limits set by the European Commission. So it's really hard to see first how you form that government, and then once you have one, how do you continue on any sort of path of reforms? That idea seems to be dead.
Yeah, and I mean, we're talking about a rainbow coalition, so it's basically a coalition with a number of parties. I mean, you live in Berlin, where it's not the norm, but certainly it's not easy, but they're used to it. It's really unclear the way forward for France to build this kind of coalition, because they're just not used to it.
Yeah, you don't have that tradition in France. We had the event this morning with Jean-Claude Trichet. You were talking to him as well, and he was trying to suggest that maybe the parties in the center will form some sort of a coalition minus the far left. But that tradition doesn't exist in France, and you already have had some of these parties on the left saying, we have won, we want to implement our program, we're going to propose to Macron a prime minister. It's obviously the president's role to actually approve that prime minister, but they also don't have a majority. So the fact that you don't have that as a tradition in France, working with one another across the political spectrum, it's going to be a really difficult negotiation. Macron said last night, I mean, actually he hasn't spoken publicly, right, since the first round, but in a statement he said last night that he's going to wait and see the constellation that comes together. So we're looking, I think, at some days at least, if not weeks, before we are able to form a government here.
Are we underestimating, Chad, also the political force that Le Pen's party can be? I mean, they have a pretty big percentage of the popular vote. They have a number of seats. Can they be disruptive in Parliament? Can they be disruptive for Macron?
Well, the other thing is we basically had this splitting of the vote among these 3 groups, and there were people on the far left and on the far right saying we want change. So if you form a government in the middle, you've basically ignored these people on the far left, far right, saying they don't want the politics to continue as usual. So even if they're not able to disrupt the policies now, what happens with the next election? Do they do better then? So it's not as if now this concern is over.
So Emmanuel Macron cannot call the next election for the next 12 months, but is it very likely that the French go back to the polls in 12 months with a lot more uncertainty? And what do we know about the president staying on as president?
Yeah, well, that's where we have to get out our crystal ball, and it's quite unclear, quite frankly, what happens. You're right, you can't call another election for 12 months, so we're stuck. France is stuck with the constellation they have for the next 12 months. Does he call another snap vote? Hard to say. He has said that he's going to stay on as president until the end of his term, but if things get really tough, that would be the other option for him to step down. It's going to be really interesting to see how things play out over the next weeks and months.
I mean, I heard it from a couple of chief executives. They're also worried about people, again, taking to the streets. I guess the supporters of both extremes saying we've been cheated because, you know, some of the votes, you know, they cobbled together to make sure that they kept the extremes out of power. And again, that will be disruptive for chief executives, for business, trying to get back to normal. And I don't know what that does to foreign direct investment in the country.
Yeah, and people feel disenfranchised. If you blocked the far right, but they did that by having people drop out of the second round of the election that many people supported. So people had to go and vote. There was some data last night that showed that many people voted against someone as opposed to for someone. So when people don't get what they actually wanted, to your point, they will probably take to the streets. There's that tradition in France, and then you have more gridlock, not just from the point of view of the political gridlock potentially within the assembly, but actually on the streets, people out on strike.
Chad, as always, thank you so much for joining us. That was Chad Thomas. Now, a quick look at markets in France, actually. We saw an initial dip for the CAC 40. Now it's getting some 0.7%. So maybe a hung parliament is very reassuring for markets. Plenty more to come. Bloomberg Brief up next, and this is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
A shocking surprise in France. A left-wing coalition is headed to victory in a blow to far-right leader Marine Le Pen. Political pressure builds. More Democrats call for President Biden to step aside as he enters a pivotal week for his campaign. And it's a guilty plea for Boeing. The plane maker admits to criminal conspiracy, readying itself for additional monitoring and a fine. Good morning, Manus.
Danny, a very good morning. Not much movement out of Boeing. So the halo effect of a drop of 8 basis points last week seems to have just paused for the moment. You're flat on equities. Two stocks stand out. Obviously, the usual morning market check on NVIDIA for you. How wealthy are you? A rare downgrade on NVIDIA from New Street. It's getting fully valued. Tesla was up for 8 days in a row. There's NVIDIA down 0.6%. Tesla was up for 8 days in a row. It added $220 billion. It's back in the green. It dips ever so slightly this morning after that 8-day winning streak. I talked about the drop of 8 basis points on Friday on the back of the jobs report. Chow down, everybody. You got fives through to 30-year paper coming through on the auction this week. $119 billion worth of, threes, tens, and 30s will come. What is our appetite? What a flatlining response. The guardrails are up. Yes, you have an accession in size and scale for the left in France, but the guardrails are there in terms of their ability to fiscally damage the euro, fiscally damage France. Or that is the assumption at the moment, as the left-wing bloc has the votes, but no absolute majority. So are the worst fiscal risks and Frexit risks off the table? Danny, good morning.
Good morning, Manus. I think that's an interesting point to debate. Is a more left-wing surprise good for this market, or is political gridlock bad, as it means they can't put in some of the reforms they want? For one thing, we know Macron can definitely take this and declare victory. Say, look, I've broken the fever grip that the far right has, but what he's left the country with is the exact opposite of what he set out to do. He said that this would be a vote for clarity. You can't really argue that after this vote we have any sort of political clarity on France.
Be careful what kind of political deal you do. If you decide to step back your candidates, nobody assumed that this would happen. Jean-Luc Mélenchon has said the NFP will implement their program in full, but of course they don't have the votes to do that. But there's got to be horse trading, and if you look at the fiscal numbers that he wants to actually spend on minimum wages, a whole host of changes, 179 billion euros, $194 billion. That is what has not spooked the bond markets yet, but you've got to do deals, so there's going to be some kind of fiscal expenditure.
By the way, just talking about the scale of what Mélenchon wants to do, I love this. Paul Donovan at UBS called it 2 Liz Trusses.
There you go.
That's how we measure things now, in a Liz Truss or not.
And there is the interesting point. The bond market, the equity market, and the currency market have been very, very sanguine. So there's no sign of that Liz Truss asphyxiation at the moment. Well, we're set for political deadlock, gridlock, if you want to call it that. The surprise win by the left-wing coalition in this weekend's legislative election. Pollsters had seen Marine Le Pen's national rally winning the most seats, but the far-right party came third behind President Macron's centrist alliance. She believes her party still has a chance for a majority in the next 12 months.
We will be in a position to have an absolute majority, maybe in a year. France is going to be totally deadlocked, with 3 groups of roughly equal size in the National Assembly. So that's the way to go. It's unfortunate we will lose another year, but if that's what it takes, well, then that's what it takes.
Let's bring in Bloomberg's Francine Lacroix, who's reporting live from Paris. Francine, great to see you. A beautiful backdrop behind you. Look, this is something that the polls did not expect. It was a surprise for many of us. So what has been the mood on the ground after it?
Well, good morning to you both. I think it depends on who you speak to, Danny. It's very clear that a lot of the supporters of Marine Le Pen or even of the far left will have been cheated. So I spoke to a number of chief executives today, and he said, look, watch out for social unrest, watch out for riots. Because of the way the electoral system worked, basically the centrists tried to freeze out the far right and the far left, and so there will be anger in the streets. If you're for the majority or kind of the center, today you're feeling that actually thanks to the French electoral system, you got rid of extremes so that there's not going to be a Marine Le Pen party in charge with a big majority like the markets were fearing a couple of weeks ago. But the concern is what exactly is the way forward? So broadly speaking, and I'm generalizing, you basically have now three big poles: the center with Emmanuel Macron's party, you have the left, which comprises of many left, you have the far left, the middle left, and the center left, and then you have the right, which is really dominated by Marine Le Pen's far-right party. How are they going to govern? It will have to be some kind of rainbow coalition, like we've seen often the Italians and the German negotiates. Remember, France is not used to it, so we really don't know who will be prime minister. We don't know how that prime minister will work with the president. There's talk about having a technocratic government, like Italy did with Mario Draghi, but who would that person be? So there are many question marks, and really it's unclear to see the way forward on who will be in charge of France in 1 week, 2 weeks, or 3 months.
Francine, good morning to you. Well, for now, the markets seem relatively sanguine. The euro barely batted an eyelid at this. The bond spread, didn't exactly aggressively move. But what does this gridlock mean versus the far right in terms of a market perspective? Are they right to be so sanguine in terms of the guardrails that perhaps the worst of the fiscal largesse of the NFP may be constrained?
Well, Manus, this is what the fear of the markets was, that you either have a majority from the far right, which meant a lot more fiscal spending, or what they even feared even more was actually a majority of the left. Because if you look at the promises that they put in spending, we spoke to a think tank called Institut Montaigne, a very well-respected think tank here in Europe, and he said if you look at the proposals of the left, they would have spent 96 billion euros a year to put that in place. Now, that is 6 times more, actually, than what, Mr. Macron had put in place, and it's twice more than what Le Pen's party was going to spend. So again, because you have this hung parliament situation, because you're expecting a broad coalition, the markets, have a sigh of relief because they don't think there's going to be extra spending. Remember, the EU has already cracked down on France for spending too much. There's a 3% budget limit, and France is already above that at 5.5%. So the markets for now are sanguine, but let's see who's in charge in a couple of weeks.
Well, bond vigilantes tend to stay in abeyance for only a certain period of time. So let's see what the coalition delivers. I've got to say, we're both envious. You've got a gorgeous backdrop there. It's certainly better than perhaps the heat that we've got here. Francine, we'll see you through the morning. Great reporting, you and the team on the ground in Paris. More coverage to come. To Washington now, President Biden dismisses calls to end his re-election bid. In an exclusive interview with ABC News, Biden said he still has the support from Democrats.
I've met with a lot of these people. I've talked with them regularly. I had an hour conversation with Hakeem. I had more time with them than Jim Clyburn. I spent time with many hours off and on the last little bit with Chuck Schumer. They all said I should stay in the race.
Now, also over the weekend, several influential congressional Democrats said on a private call that they want Biden to step aside. Here's what Representative Adam Schiff told NBC's Meet the Press yesterday.
The performance on the debate stage, I think, rightfully raised questions among the American people about whether the president has the vigor to defeat Donald Trump. And this is an existential race. Given Joe Biden's incredible record, given Donald Trump's terrible record, he should be mopping the floor with Donald Trump.
Well, joining us now is our government reporter, Kate Ackley in Washington. Kate, good to see you. I mean, the president says that he spent time talking to one of the names there was Hakeem Jeffries, but of course Hakeem Jeffries brought together a number of very, very senior Democrats yesterday. And there's rising angst in the ranks of the Democratic Party about Biden enduring here, isn't there?
Absolutely. I mean, on Capitol Hill, this is going to be a pivotal week for President Joe Biden and the support that he has or doesn't have among fellow Democrats on Capitol Hill. You know, this is going to be the first time in, more than a week that House members, Senate members are back on the Hill. They're going to be, getting tons of questions from reporters, of course, but also they're going to be talking in person, huddling with one another. So we're going to see, what is their response? Is it a fractured response where, like it is right now, where you have a handful or more Democrats publicly calling on Biden to drop out of the re-election race? Or is there sort of, consensus that emerges where they either throw their support behind him or suggest that he get out of the race?
I mean, you'd imagine that this is exactly what Team Trump wants, a fractured Democratic Party where all of the focus is on them and not necessarily candidate and former President Trump. Kate, I find it fascinating to look at who is publicly talking, or who at least behind the scenes we know it's talking. It's congressional members, for the most part, are secure in their seats. What does that tell us about the effects of this fractured party on down ballot voting?
Right. I mean, control of the House and the Senate, these are both, held by very narrow margins. The House in Republican control, the Senate in Democratic hands. But, in November, both are up for grabs. And so that is going to be a key part of the calculation among Democrats. Do they think that Joe Biden is a drag on them down ballot? And we have seen some, House Democrats who are in very tight re-election races to keep their seats, who have called on Biden to drop out, or who have said that Biden is, going to hurt their chances in November of either gaining control of the House or keeping the Senate.
Well, we know Biden has a busy schedule in the meantime, not least a NATO summit coming up. Kate, thank you so much for getting up early for us. Kate Ackley of Bloomberg Government in Washington. All right, Manis, let's get to some of the other top stories that are trending on the terminal this morning. More in politics, but in Iran, they have elected a reformist president who wants to revive the nuclear deal. The 69-year-old heart surgeon won by almost 3 million votes in the runoff election this weekend. Turnout, though, was below 50%. The U.S. State Department said the low turnout was due to the elections not being, quote, free or fair.
The People's Bank of China has acted to take greater control over short-term borrowing costs. The central bank tightened the band within which short-term rates can fluctuate and will conduct additional open market operations as they're needed, including bond purchases, repurchases.
And Hurricane Beryl has made landfall in Texas after striking Mexico. As of the last update, Beryl was moving north at 12 miles per hour, hitting Texas with strong winds with flash flooding expected.
Coming up in the show, more from France. The country looks to be headed for political gridlock. We'll get the first take on the French election this morning for New York. Context matters on Bloomberg.
picks. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
France is set for political gridlock after a surprise win by the left-wing coalition in this weekend's legislative election. Pangaea policy founder Terry Haynes writes this about the results. The markets are likely to judge the election's results to perpetuate and maybe accelerate the parlous state of the French economy and potential to create a French analogue to the UK's 2022 Trusses moment. Our guest this morning from Paris is Mabrouk Chetouin, head of global market strategy at Natixis. Mabrouk, thank you very much for being with us this morning. There's just one take on the scenario that this could evolve into a Liz Truss moment. But if I look at the reaction from the bond, the equity, and the currency market, the guardrails are up. The worst case scenario for the left really having fiscal power seemed to be contained. Are we right to have such a sanguine response in the first instance?
Well, thank you for this opportunity. Well, clearly the reaction of the market is quite, let's say, calm and expected, because it has started last week when we look at the reaction of the behavior of the bond market. The bond market that was, pretty calm, and the equity market has started to rebound. And the pricing, the implicit pricing on the market was, a hung parliament with no majority, no clear majority, and this is exactly what happened. So the scenario of the market is taking place, and what the markets, need is clearly more visibility and more clarification on the coloration of the of the parliament. So definitely we need to wait a bit more to see what could be, the next prime minister in France, what could be, the color of the next coalition. And so far, we can say that all the scenarios are on the table. But definitely, now the market are reacting quite well, and clearly it's exactly what they were expecting.
Does there still need to forever here with this coalition be a risk premium built into French bonds? Because you still have a spiraling deficit, weak growth, and potentially gridlock, even as it might shake out to be some sort of coalition. Can it really deal with that? Are French bonds still attractive regardless of how that looks?
Well, again, it's pretty soon, to say that these premia will collapse, against the bond, in effect. Because, we don't know exactly what could be, the pattern of the next fiscal policy. Definitely, we need to bear in mind that the French situation is pretty complex. We have already, a deficit at 5.5% last year. And clearly, it's the previous government was already looking for 20 billion euro to finalize, to reduce, the deficit. So imagining that the next government is able to spend more, it's pretty complex. So we need more, let's say, more ingredient to make any assumption on this premium, on this spread between the bond. But definitely, so far, this premium will not disappear, because we don't know exactly what will be, the next fiscal policy implemented in France.
Well, the rating agencies want to see 20 to 30 billion euros worth of savings. The NFP want to spend 194 billion euros if their fiscal plan has any legs at all. So that gap needs to be closed. Let's talk about the flow of capital out of Europe and out of European equities. Does this gridlock raise the spectre of more significant flow out from France and out of European equity?
Well, I think that the situation, the reaction of the equity market has been a bit exaggerated. I would not be surprised to see, inflows in the European market and in particular on the equity market. Simply because, the situation, if there is no clear majority, if the situation remain, stable on the tax front, on the tax policy, this is, a situation where nothing will, deteriorate in the future. So these situation could be, a good excuse, to take the opportunity to buy the French market and to buy the European market. And we have to bear in mind something really important when it comes, to the equity markets, that the investors will start to look at, what will be the earnings growth for next year. And when you look at the consensus, earning growth, when you look at the CAC 40, when you look at the DAX index, are pretty well oriented so far. So we need to stay, a bit confident. And the reaction that we had since, this political episode has been, in my opinion, exaggerated.
Mabrouk, taking a step back here, it is a market, as you're sort of alluding to, that's been whipped around by political risk. I thought Paul Donovan at UBS puts this really well, that it's a problem for markets, that politics is becoming more important to markets, but opinion polls are less reliable as a guide to outcomes. Is there any takeaway from the drama of not French politics, but of markets trading around it as we deal with political risk happening throughout the globe in 2024?
Well, the political risk is a very important topic for the market, because since the beginning of the year, we know that we had different elections, and this one has not been expected, of course, and clearly it is a source of risk for the market. But what I want to say is that investors are more and more used with this political situation. And when you look, at the European countries, coalitions is the majority, is a rule. So we need to live with this situation. In the US, we have the US election, of course, in November, which is not, in my opinion, a risk. So because market get used with this situation.
Okay, Mabrouk, we're going to have to end it there. Thanks for joining us. Mabrouk Chatouan of Natixis here on Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially, I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
let's get you some of the front page news that's making headlines around the world. This won't come as a surprise. The first up, we were just talking about this man, is Marine Le Pen's shock defeat in France. Le Monde, of course, leads with this, as every French outlet and every U.S. one does, but it's the left wing that really surprised us, coming out on top, unprecedented. Now the question is, what kind of coalition formed, and is it gridlock from here?
Yep, so we'll keep an eye across that, flatlining on growth. Next up, President Biden remains defiant in the race for the White House. The Journal leads with this. More calls for him to exit the race. You've got private meetings, senior House Democrats, Republicans, including Jerry Nadler, Democrats, Jerry Nadler, Joe Morell of New York, Adam Smith of Washington, Jim Himes of Connecticut, and Mark Takano of California. Again, that coalition of dissent is building, Danny.
And finally, we have to end with this. The FT has this as one of their leads.
I've got a drum roll here.
Paramount has finally agreed to a Skydance merger. The Redstone era is over. I'm most fascinated to hear about what he's going to do to this company. Paramount Plus is bleeding cash. People aren't going to the movie theaters. All the kids aren't watching TV. They're watching YouTube and Netflix. I mean, what is he going to do to turn this around?
Well, he's got another 45 days in which Skydance could actually go and find another studio. So if you think it's all over, it's not all over yet. But they are going to put $8 billion into this. And I think herein lies the point. If you look at what Shari Redstone said, we want to fortify Paramount for the future while ensuring that content, now listen to this, everybody, content remains king.
Oh, I think I've heard that phrase before.
Yeah, I use it every day. Stephanie Roth joins us. She's coming up with Wolf Research.
Also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is Bloomberg.
From our global headquarters in New York, I'm Danny Berger alongside Manish Cranny. Let's set your agenda.
A shocking surprise in France. A left-wing coalition is headed to victory in a blow to the far right lead Marine Le Pen. Political pressure builds. More Democrats call for President Biden to step aside as he enters a pivotal week of his campaign. And a guilty plea for Boeing. The plane maker admits to criminal conspiracy, readying itself for additional monitoring and a fine.
Well, Manus, 34 record highs is where we find ourselves for this equity market. Can it notch another one today? We are basically flat as a pancake on the S&P 500. Futures down by 0.04%. Oppenheimer's John Stolfus, another upgrade, the second biggest bull on Wall Street at 59,000 rather, right under 6,000 of the highest estimate. Two-year yields, they move up by 3 basis points, but the two-year yield did have its lowest closing level since March on Friday after the jobs report. Finally, euro versus the dollar also flat. For all of the drama in France, Manus, this market is very well behaved because it assumes there is gridlock. But is gridlock really a good thing in this case? They have a spiraling deficit. They have low growth in France. If there's gridlock, none of those problems are going to be solved.
No, but this is going to be uncomfortable cohabitation. I was interested to hear the Natixis, the chief strategist that we just had, going, you're painting this as being sort of something quite shocking in America when really it's nothing shocking at all. It is a shock. The assumption was by the markets that you were going to have Marine Le Pen as being the #1 party. She's not. And the left wing has exceeded. Now, there's got to be horse trading. The bottom line is you could have a state of, let's say, unease for a year, but there's got to be horse trading. And that means at some level, there's fiscal give. Right. At some level.
Right. And we're going to talk to Francine Lacqua about this in a moment. But you know, you look at the left's policies and you'd say, of course, the market would be scared by that. And it's currently not.
No, not at all.
But what it wants to spend 4% of GDP, again, as Paul Donovan puts it, that's equivalent to 2 Liz Trusses, which I'm all here for measuring fiscal spending in measures of Liz Truss.
You know, I mean, she will be forever remembered, but in a very, very real sense, it is what could potentially spook the markets. Totally. And for now, the guardrails are up as Marine Le Pen believes her party still has a chance in the next 12 months to get a majority. Take a listen.
We will be in a position to have an absolute majority, maybe in a year. France is going to be totally deadlocked, with 3 groups of roughly equal size in the National Assembly. So that's the way to go. It's unfortunate we will lose another year, but if that's what it takes, well, then that's what it takes.
Francine Lacqua is on the ground in Paris reporting for us. Francine, good to see you. So the result has come as a complete surprise to everybody else. Maybe not the chief strategist at Natixis, but what is the mood in France? I mean, will there be pushback in the streets in terms of the left exceeding more than they had assumed versus the right? What is the mood in Paris? How would you describe it? Good morning.
Good morning to you both. I mean, I think if you're a French person at the moment, you're probably trying to figure out whether it's time for you to go to the streets and riot or protest. So we will probably see a little bit of that over the next couple of weeks, just because a large population, of course, in France, think they've been cheated out because Marine Le Pen did not come into power. But as you say, look, man, it's complicated because you don't really have a kingmaker. You don't really know what this coalition ends up looking like, which is why the markets are so relieved. They think, look, if it's a kind of like a hung parliament where they have to cobble to election a coalition, not much will be done. Because remember, it's the far left and the far right that is really spooking the market. It's because of spending. Now, both of them, with various reforms and agenda, wanted to lower the retirement age, wanted to give more to workers, or wanted to blow up, in certain cases, a system, and that takes money. So we don't have that tail risk anymore on both sides. I think what markets are really underestimating is, look, we have not heard from Emmanuel Macron so far. We haven't heard from him in about 10 days. Where is Monsieur le Président? Will he come out and say something on him standing firm? And if you have a lame duck prime minister, Gabriel Attal, who's of course from Macron's party, who's the chosen one by Emmanuel Macron, saying he'll resign, but he needs to stay caretaker, not much will be done in France for the next 2 months, 3 months, possibly 6 months until they get to act together and find a new prime minister. What does that mean for direct investment? What does it mean for money wanting to come in? So, you know, maybe the market is a little bit too sanguine because there's not really a way forward right now.
Yeah, that's going to be, it's a great point, Francine, very symbolic. We haven't heard from him after an election where people voted for what they were against. not what they were for. Francine Lacqua in Paris, thank you so much for you and all the teams reporting this morning. Now, let's switch gears to the U.S. because it is a busy week ahead. Just to show you some of what we're going to see, we're going to get Powell testimony both tomorrow and Wednesday in front of Congress. CPI hits on Thursday. We're going to have both PPI and UMich sentiment on Friday. Of course, a lot of data in between that as well, along with weekly jobless claims. Joining us now is Stephanie Roth, Chief Economist at Wolfe Research. Stephanie, thanks for joining us. Great to see you this morning.
Good to be here.
So what's the focus for you this week?
Definitely going to be CPI and then followed by PPI. So we're looking for 0.22% on core CPI, which should put the Fed at another month of core inflation actually close to where they're looking for. So that would put core PC at 0.19 or below, in which case that's another month that's putting them closer to being able to cut in September.
How much more do you think that they need to see to give them that confidence? We've got Powell, his testimony in front of Congress this week. How much more do they need to not be behind? I mean, so the accusation is they are slightly behind the curve at the moment. How much more do they need to sort of take them forward?
If we get the next two prints looking in line with kind of what we saw, it won't be as weak as we got the last month. There were some sort of anomalies. But if we get something like core PCE printing 0.18% month on month for the next 2 months, they can absolutely be cutting in September. The data also have been soft from a growth perspective.
I think this idea of are they behind the curve has been a really interesting one because it's an accusation that keeps coming up. And part of the argument is that they looked at this bumpiness in the data in the first quarter. And so they're looking at the data now and saying, I don't know if I can trust this because of what we saw some in the first quarter. I mean, is there this kind of behavioral bias that does risk the Fed being behind?
I think that's fair. And Powell has been one of the ones out there advocating for this being largely seasonal. So he's been more consistent. It's been some of the other FOMC members that have been changing their tune a little bit. But I think once we get 3 months of really solid inflation data that's consistent with 2% inflation, and with some of the softer data, with Friday's payrolls being consistent with that, we're starting to see a slowdown in economic momentum. It makes sense for them to be cutting in September.
We can't get off this set without talking about politics. We don't know how the next 24 hours is going to go for Biden. We don't really know who's going to be on the Democratic ticket. It could all change again. From the perspective that Danny and I have sat through in bond markets, is like steepeners are us. That was politics. Then smacked by the data, and it was like reverse. So for me, the bond market is punting steepeners, whereas on politics. Whereas the equity market is just going, just drive on, it'll sort itself out. There's a real difference here between the activity in the bond market and that of the equity market from where I'm sitting.
Yeah, so what you're seeing is the Trump trade has been a steepener to some extent. I actually think it will ultimately be more of a flattener because realistically, if we end up getting significant amounts of tariffs, that's going to slow down the economy and risk putting a real significant slowdown. This wouldn't probably happen until the end of 2025, so we're talking a 2026 type outlook, so it's too early for that trade to actually play out. But that's what I think would ultimately happen if we end up with all of these tariffs that Trump's proposing.
But one of the arguments is also that tariffs are inflationary. Immigration limiting that is also inflationary. Jan Hatzius over at Goldman saying that would result in 5 rate hikes. So what's the interplay between more inflation and weaker growth and how that translates into policy?
So it might not be as inflationary as many people think. So it's inflationary in the sense that, of course, your goods prices are going to go up in a big way, but that's going to hurt consumers, right? At that point especially, we're going to be another 2 years into, or a year and a half into the economic expansion. You're going to probably slow down the consumer in a pretty big way if you see 60% tariffs on China. And as for immigration, we're starting to see labor demand slow down. So if we get to the beginning part of next year and Trump cuts off the humanitarian parole programs that we've put in place, it might not matter that much because we probably don't need all that supply.
Well, it sounds as if a lot of the reversal, the flattener, from the steepener to the flattener, is a back 2025. The immigration that Danny has talked about and the inflation risk is a back 2025. In that interim period of time, you're going to have a Fed potentially that is cutting 50 basis points maybe this year and incrementally next year. Is that the bolstering factor in all of this in regards to the equity market? Does the equity market go on and on and on, to quote Celine Dion, right the way through?
Must, yes.
Yeah, as you do. It's Monday morning. Why not? Let's have a little bit of music in there. That is what bolsters the equity narrative rather than the potential political outcomes that are 2025 back-ended.
I think that's fair. The market, and by the way, whoever wins is probably going to spend a lot. That's what we've seen. Both administrations that may play out in 2025 like to spend in a material way. So that's probably what the market's going to focus on, at least for now.
Can we go back to the jobs data? Because in the break, we were talking about something I thought was really interesting, that overall, okay, it looks softer, not soft, still a healthy market. I know that's your view, but can you talk about the breakdown of jobs and some potential trouble you might see there?
Yeah, I mean, a lot of the jobs have been driven by the acyclical sectors. Government, healthcare. That's what we've seen for the past couple of months, and that's been the case for quite some time, which is a little bit, concerning to some extent. We did see that in the back part of last year, and it ended up getting revised away, and we got an upward revision to the more cyclical category. So it is possible we would see something like that. But this is the one piece of the jobs market that I'm looking at most closely, because you are starting to see a slowdown in retail and some of the more cyclical manufacturing type sectors that it's a little bit less optimistic from that perspective.
Does Goldilocks get indigestion?
Too much porridge.
No, but on a slightly more serious note, we talked about Friday's report being a Goldilocks kind of report, 4.1%. There was some revisions, 111,000 in the April and the May numbers. So there were fissures. And the question is, how quickly does that unravel? It is not, as I said this on Friday, it's not the year 2000. It's not 2008. We're not facing GFC. So this slowdown in jobs could be something a little bit less onerous than perhaps we are used to.
Yeah, I think that's fair. And by the way, 136,000 in private payrolls isn't that bad. It's fairly close to in line with historical averages, right? We don't really want to see payrolls growth of 400,000 again. Like, that's not a good scenario, because then the Fed certainly can't be cutting. So this Goldilocks scenario is kind of playing out. I think people are just extrapolating the trend. And by the way, layoffs aren't picking up. If you look at Challenger Gray, if you look at the JOLTS report, like, that's what we're seeing is a slowdown in hiring, not a pickup in layoffs.
Okay, it's a different side. Stephanie, thank you very much. Stephanie Roth of Wolf Research, our guest this morning, with some warnings on the job outlook. Well, the Chancellor of the Exchequer for the United Kingdom, Rachel Reeves, is speaking at the UK Treasury in London, laying out the new Labour government plans. This is her first major policy speech as Chancellor. You can pick that up on Live Go on your Bloomberg terminal.
Be kept to, and they will be delivered on. That includes robust fiscal rules, and it includes our commitments to no increases in national insurance and the basic higher or additional rates of income tax.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like, that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
It is Bloomberg Brief this Monday morning with me, Manus Cranny, and Danny Berger in New York. More turbulence for Boeing, the company agreeing to plead guilty to criminal conspiracy in connection to 2 fatal crashes on the 737 MAX jetliner. For more, we're joined by Sid Phillip, Bloomberg's deputy team leader and senior reporter for global aviation. Sid, this is perhaps the compromise by Boeing to make sure they don't have to go through a trial. This is financial pain and a metaphorical rap across the knuckles from the regulator, but does it close the issue?
Morning, Manus. So it doesn't quite close the issue because Boeing is obviously signing up. They've admitted, they pleaded guilty, and that sort of opens them up to being a felon, and that makes contracting, especially on U.S. government contracts, much, much harder for them. And so it isn't really easy, but at the same time, it avoids the whole protracted court battle that would have ensued if they had not agreed to this deal.
It's a great point, Sid, because now the Defense Department is going to find themselves in a situation where they're going to be buying things from a felon, from a company that's pled guilty. On the case of their monitor, I mean, some people would look at this and say, why hasn't the federal government do this? Why haven't they done this already? What does it mean for how Boeing operates from here on out? What difference does it make for them?
Yes, Danny, so it is a very complicated situation for Boeing. I mean, they're in the midst of a whole search for a new CEO. They're doing some soul searching in terms of trying to get their quality back on track. And this just adds one more dimension to their struggles. And in terms of what the Federal Monitor does, I mean, it will mean more oversight on Boeing. It will mean more pain for Boeing. And potentially, it could be something that means that ramp-ups in production and everything are delayed until they can actually get their quality and everything else on track.
Okay, Sid, thank you very much. That is Bloomberg's Sid Phillips. Okay, coming up, we have a busy week ahead. By the way, that includes a new show premiering on Bloomberg today. We're going to bring you the details of that and what's coming up throughout your week here on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest premieres Monday at 9 a.m. Eastern, only on Bloomberg Television.
All right, let's get you set up for your trading week. Fed Chair Powell will be delivering his semi-annual testimony to Congress. That happens on both Tuesday and Wednesday. Then we're going to get the big data point, June CPI. That is on Thursday. We're also going to round out the week with earnings from JP Morgan, Citi, and Wells Fargo on Friday. Manus, with a lot of data in between.
Yep, well, certainly all eyes down on that CPI. Will the bond market be focused on that? There is a lineup for you. This is what's happening this week. It is the launch of Bloomberg Open Interest, 9 a.m. Eastern every day. And Matt Miller, one of the co-hosts, is with us this morning. Good luck with the launch. It looks like a pretty cool lineup, all about stocks, single stocks.
Yeah, I mean, the idea initially was that we would look at the macro through the lens of the micro. So you can tell a story about what's happening in the company through someone like Smurfit, which makes containers for all sorts of consumer products. You know them well. It's a British company, but they're changing their listing to the New York Stock Exchange. So that's why we have Tony Smurfit on the show today. Or through a company like Lamborghini, of course, one that's near and dear to my heart. Absolutely. I have always covered the automotive sector very closely. And, you know, there's so much talk about, has the high-end consumer hit a ceiling here? Are they needing to step down, for example, going to Walmart, as we heard in the earnings report, to save money? Are they still buying Lamborghinis is the question that we'll put to the CEO, Stefan Winkelmann.
It wouldn't be a new Matt Miller show without a car conversation.
You've got to have the car conversation.
I think our audience would be very confused without that, Matt.
I want them to listen, you know, but we also have, you know, your typical Wall Street superstar stock guests. We have Mike Wilson on today from Morgan Stanley. And we're going to talk to him about, you know, being one of the only naysayers left in this market after Marko Kolanovic left JP Morgan. We're going to talk with Howard Marks of Oaktree and ask him, you know, if there's any if this is at all a target-rich environment in terms of distressed debt. We're going to talk to Maria Feitmana from State Street. Get a bull on the show, you know, as we hit, what, 34, 35 consecutive records on the S&P. So we're going to definitely be talking about stocks and the stock market at the stock market open. That was the idea.
And I think this is probably an even more prescient time. You look at, you know, Julian Emmanuel, who's calling 6,000 on the S&P 500. It's 34 records in a row. Now is the time when you really need to drill in. What's on the balance sheet? What debt have you got? What's your maturity wall? We've talked about the maturity wall time after time after time. So I think even more detail on individual names is probably what this market really, really wants, drilling in to where the CEOs take these companies.
Yeah, absolutely. Looking to see, you know, which stocks you can buy at a very frothy time in the market. I mean, Emmanuel's target of 6,000 was interesting. Mike Wilson says 5,400, but he said it could also equally be 4,500. There's a very broad range. He's got a number of risks that he's looking for. You talked to him on Bloomberg Surveillance, Danny. I watched that interview last month where he said you got to be worried about higher inflation. If there's a Trump candidacy, you've got to be worried about government spending out of control no matter who's elected. Obviously, election risks.
You doing any politics today?
Elections are going to be obviously a very big focus for us today. After we got the results of the UK, after we got the results of France, and ahead of, you know, the all-important November election.
I think I'm most excited for this show to hear about stocks other than NVIDIA. I'm really thrilled for that. I know you're probably going to cover NVIDIA,
yeah,
but
I mean, I'm sure we'll talk about NVIDIA, but absolutely, there are other stocks in this market. I think there are like 8 or 9 other stocks that we're going to be paying attention to.
There's one downgrade for NVIDIA today. It's like, you know, a rare market event kind of thing. What is it? New Street. Apparently, it's getting fully valued.
Oh, haven't heard that before.
It's finally breaking news.
Finally
NVIDIA
there.
is fully valued, eh?
Hey, Matt, we're really looking forward to catching your show today. Thank you so much. That is Matt Miller. And, of course, you can watch him on our new Open Interest show. Man, let's get a quick, I mean, we were just talking about single stocks, but let's look at this overall market because it is one of stasis at this moment. Even though we have these political disruptions, it is wait and see for the U.S. data this week, whether it can confirm a cut or, I don't know, confirm more slowness.
Yeah, I mean, there's also a fairly chunky bond auction coming down the pike this week. You got 3s, 10s, and 30s, 119 billion worth of paper to come, down by 8 basis points on Friday, and that reinvigorated the stock trade. I just wonder to what extent you see, just bear with me on this, you now have a rise of socialist parties in the United Kingdom. and in France, and there is a flow of money. Obviously, the great vacuum cleaner for the flow of money has been the US equity market, and as you see this flow of money, potentially there will be a shift in gear from the United Kingdom and from France. And where does that go? Is the US the haven in this political situation, but it has its own sense of chaos as well in politics?
Right, it's the idea of the least dirty,
least dirty shirt.
Clean, dirty shirt. Exactly. But this is the thing, is what we're seeing in France, what we saw in the UK, it's happening over the world, where you're not seeing votes of saying, this is who I want to vote for. It's votes against something. Yes. And when you have votes against something, it is just regime shifts. It is changes away from the status quo. And changes away from the status quo also translate into uncertainty. This gets back to what you're saying, Manus. For businesses especially that have been courted by the French government, with banks moving into Paris, with Macron saying, JP Morgan, Goldman Sachs, take your UK business and bring it over to Paris. What happens now, where now the UK is looking like a relative island of stability?
Well, you'd be pretty sure that the banker's bonus tax cap, which has been removed, you know, that is going to be something that people are going to look at in terms of the United Kingdom. If you look at what that migration of talent and capital and expertise out of London and into France, that's because of Brexit, and there are still very significant reasons for you to continue that. But that banker's bonus cap being removed now with what's going on in France would be really, really interesting to see how it plays out. And it's not going to happen overnight.
No, it certainly won't. By the way, Rachel Reeves has been speaking, the new Chancellor of the Exchequer, some very UK-specific things, ending a ban on new onshore wind projects. They're going to restore mandatory housing targets, but really talking about fiscal prudence. It is clear that they are left, but they have moved more towards the center, a trend we have seen on and on. Okay, that's it for us. Surveillance, that's ahead.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Fed officials will tell you it's about the totality of the data, so it's not just what's happening with the labor market, but what's happening with inflation.
The hope would be, of course, that rate cuts would be forthcoming.
The Fed's not going to move at the end of this month, but September is live.
I think what will cement September is really another round of data.
At the end of the day, what's going to drive the Fed in the next 3 months to September is inflation.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. Coming off the back of the best week since April on the S&P 500. Coming into Monday at all-time highs. There is something for everybody this week. A double dose of Chairman Powell coming up a little bit later. CPI later on in the week. Q2 earnings kicking off with JP Morgan as well. We have to begin with another upgrade to the S&P 500, this time from a good friend of this program, John Stolfus. Over at OPCO, the new numbers, 5,900 from 5,500, the second most bullish on the street right now. The line, Lisa, from OPCO, the bull market has legs.
Given the fact that we've seen this sort of multi-cylinder aspect of the rally, and we've seen that over the past couple of weeks, this is the first time that we've seen in history, at least 2015, we haven't seen all of the Magnificent Seven names being down on the same day. This has been built up by fundamentals and many different names pulling their weight.
We're bored by all-time highs,
yes,
aren't we? The drama has been in the politics, the political world, down in Washington, D.C. The pressure building on President Biden. There are more and more House Democrats lining up, calling for him, Anne-Marie, to step aside.
That's right, whether it's publicly or reported by Bloomberg, coming out of this meeting yesterday with Minority Leader Jeffries, Hakeem Jeffries, 9 Democrats we know at this moment are calling for the president to step aside and pass the torch to a new generation. Now, lawmakers are coming back to Washington, D.C. today. Between the Senate and the House, there's going to be meetings, especially tomorrow on Tuesday. Does that number grow? And look at what Senator Chris Murphy said over the weekend. This is a very critical week for Biden. Not only is it going to be hosting world leaders, he's giving a press conference on Thursday. And it's not really what he says at the press conference. It's how he says it. It's can he formulate sentences together, how he looks. All of this is going to be scrutinized to the highest degree.
Here's what I love. Stuart Kaiser, who's coming up later in the program, put it really well. He said, near term, it's inflation data on the start of earnings, where you started. Medium term, it's the political drama that you're talking about when we talk about potential risk, as well as, of course, the fact that jobs and inflation, question of how much they're actually going to work to the Fed's favor. But this is the issue. People don't know how to even play this. I don't understand whether, basically the idea of a Trump trade was the same one that we saw back in 2016, but it reversed as soon as people really gathered what would happen.
Before we even get into market consequences, there is a very subtle but very important disconnect between House Democrats and the country. House Democrats are freaking out about their prospects of winning in November. The rest of the country is talking about the next 4.5 years. I think that's a really important disconnect right now, because this has been a conversation in the general public and the electorate now for the best part of 3 years. We've been talking about this for a while. It's been in the polls for a long time too. It's only in the last couple of weeks that House Democrats have started to freak out about their prospects of winning in November.
Well, the debate opened the doors for people to vocalize potentially some of these concerns and consternation they had behind closed scenes. What we've seen in the polls for the better part of a year, that Americans have been concerned about his age, but the debate performance was so concerning and so disastrous for Biden that Democrats are now coming out. And the ones that we know of, a lot of them, after this weekend's call with Hakeem Jeffries, a lot of those individuals are top of the rank when it comes to committees. Wait till the ones that are in serious, hardcore elections in November, and they are at risk of losing their seats. The calls are just going to grow.
Peter Baker of the New York Times put it really well when he said, the conspiracy of silence was broken. This among Democrats. It was a silence among elected officials and a lot of media members. It was not silence among some of the voters who had already been indicating their concern about this.
More on this conversation in just a moment. I want to talk about what's happening on the other side of the Atlantic and focus on politics out of France. Let's bring up the board and look at the euro. The euro's doing nothing at 108.36. French bond yields are higher by a couple of basis points at 3.23. If you came into all of this worried about France's fiscal trajectory, if you came into the weekend worried about France's ability to govern itself, I think you come out of the weekend, regardless of the results, Lisa, still worried about what's happening in France.
Here's my ultimate question. Is political gridlock a good thing? Is it a good thing for markets? Is it a good thing for government? In French markets, it's less clear, I think, than U.S. markets, where it's clearly something that is welcomed by governments. But what we saw from Frederic Ducazet of Pictet Wealth Management, he came out and said, basically, chronic instability may require the president to resign. And this is the fear that a lot of people have at a time where they need to make some real budget decisions.
When it comes to also what the left is calling for, you have UBS, Paul Donovan, saying this is basically 2 Liz Trusses, 4% of GDP of what they want to spend. But the fact that they haven't got all the seats, there's going to have to be a coalition or gridlock, a hung parliament. This basically says to the financial markets, status quo.
That's Europe. Let's get to the scores more broadly. On the S&P 500, equity futures not doing much at all, just about unchanged. Positive every single trading day last week. A really stellar week of gains on the S&P and on the Nasdaq. Not so much on a Russell. We'll be talking about that a little bit later. Yields are higher by 3 basis points. The 10-year 430.96. And in foreign exchange, as I mentioned, the euro 108.36. Coming up this hour, here's the lineup for you. Terry Haynes of Pangea Policy on the growing number of voices calling on Biden to bow out. Jeff Yu of BNY Mellon with traders raising bets for the Fed to start cutting rates in September. And Neela Richardson of ADP with a busy week of data on deck. Bramo, the week coming up, not just the data, but Chairman Powell twice, and the earnings kicking off on Friday.
So what I feel like is that there is sort of this competing discussion right now about which is it? Is it immaculate disinflation or is it the winds of stagflation? And this is really going to be in cold relief this week. We have economic data front and center. We have CPI and jobless claims on Thursday, PPI and University of Michigan sentiment survey on Friday. Before that, as you were mentioning, John, policy very much in the front and center with testimony on Capitol Hill from Fed Chair Jay Powell, 2 days of that. Treasury Secretary Janet Yellen is also going to be speaking amid those swirling rumors about the Biden race and kind of whether he's going to drop out amid the NATO meetings. And then, of course, the start of Q2 earnings. We haven't even talked about this. We get JP Morgan, we get Citigroup, we get Wells Fargo on Friday, we get Delta before that on Thursday. And I really think this is going to really raise the question of their outlook, their visibility into the future.
I was going to say something really serious about the week ahead, and then you mentioned Delta. Terminal 4 at JFK.
Yeah, I know.
It's got worse.
Terrible. I know.
You have to get a shuttle to get the cabs now.
All right, okay. Anything else?
Yeah, 10, 15 minutes sitting there on a shuttle to go and get a neighbor from a car park
Have you seen LaGuardia? It is beautiful. It is finally a first world airport, and that's what JFK wants to get to. And the problem is it just takes more effort when you have infrastructure already built.
That's the price you have to pay.
Correct.
Okay. It really made me laugh coming out of Terminal 4. So you're coming out of JFK and working your way back into Manhattan.
It's horrible.
The traffic's really backed up. It's terrible. And you can see the roadworks on the side. And there's a sign there saying that this is a consequence of the Bipartisan Infrastructure Act. And you're thinking, I'm not sure that's good promotion for Washington, D.C. at all.
Thank you. Aces.
Thank you so much for that. Let's begin with our top story. The pressure mounting on President Joe Biden to end his re-election bid. According to people familiar with the discussion, several top Democratic lawmakers are privately joining the calls for Biden to step out of the race. Another 5 House Democrats have gone public. Terry Haynes of Pangea Policy is writing this. Biden's given a middle finger to a Democratic political and donor class that's always viewed Biden as their creation that they can cast off at will. He just reminded them it's not that simple when you're both the president and the nominee. Terry joins us now for more. Terry, wonderful to catch up with you, sir. In about an hour from now, we'll catch up with Henrietta Trey, someone you know from Vader Partners, who's saying this, that 70% odds on Biden stepping aside in the days ahead. Terry, you take a very different perspective on this. What's behind that view?
I don't see the pressure on the president, frankly, and much more importantly, the president doesn't see the pressure. You know, the ballyhoo over the weekend is a bunch of mid-bench Democratic lawmakers, no offense to any of them, and a supposedly brewing insurgency by Mark Warner. What these things have in common is that they are nods to the Democratic institutional, political, and donor class. Who 2 weeks ago were heading up the Peter Baker conspiracy of silence that you all referenced, and today are screaming to get out. And plus that, you make a very good point, John, that largely what this is about whether he can win, not whether he's still fit to be president, and that tells you an awful lot about the motivations here.
But Terry, this list of individuals is likely growing to call. We have lawmakers coming back to Washington today. What's the threshold for the Biden team to hang on?
Well, I think it's very simple. the weekend press was full of stories and visions or videos showing the congressional delegation going down to basically tell Nixon he was through in 1974. You look at who those people were. They were the Republican leader in the House, a former presidential nominee of the party, among other things, and a very senior senator. You know, a bunch of mid-bench Democrats doesn't get that done. A bunch of folks in the Senate doesn't get that done. And you know what I think the White House is looking at, frankly, is look, you know, we're here. He's fine. We can walk through the next week and show that he's fine. And then what's going to happen is that the press and a lot of people are going to see this fizzle a little bit, and the press will turn its attention to the Republican convention. I bet that's what's going on here.
But Terry, Biden over the weekend accidentally said he's the first black woman to serve in the White House. There are going to be more moments like this. What is the next event that you foresee, potentially like the debate, that can open up the floodgates even more to mount pressure on this president to step aside?
Well, you know, you all well know I'm not a Biden apologist here, but you know, and one other thing I wrote, I think Friday night after the Stephanopoulos interview, is that, you know, this isn't baseball. Biden doesn't have 2 more strikes; he has 1 more strike, and he's got to prove every day from now until the election that he's up to this. Because if there's 1 more slip of the kind that he had in that debate, I think he's basically through. I think the floodgates open for the Democrats if that happens. But absent that, I don't think it's going to happen. And frankly, I think what you're seeing from Biden is disdain towards the Democratic political and donor class that helped him until last week, and now decide they want him out. You know, the White House isn't buying it. Biden personally isn't buying it.
So basically, is this the conspiracy of silence waking up, and everybody else already has been in this game, including the voters, and this doesn't really change anything? Or has this been a market change where essentially, as things are going, given that time is running out for Biden to step aside, Donald Trump will likely win?
Oh, I don't think that's the case at all. You know, it's one other thing I push back at. You know, there's a great overbelief in the Democratic establishment among those who think that you know, Biden's going to resign soon. I mean, you know, the Almighty has to tell him. So, and none of those people are the Almighty. The other thing is that they're looking at the wrong polls, frankly. The polls, including Bloomberg's own poll yesterday, show the race still at a dead heat in the Electoral College, which is the only place it matters, with still about 77 Electoral College votes up for grabs. And, you know, Biden's got 4 months to try to convince those people. And the Democratic Party is going to do that by, frankly, turning itself more into an institutional party of the kind, and you heard this on the Sunday shows, where, you know, we're for all the right things that you like, you know, social issues, economic issues, you know, we're for all the things that you want, and we're going to go convince you, independent voters, that we're worthy of your vote, and regardless of who the president is, and we're going to scare you even more about Trump.
Terry, great to catch up to get your view. Terry Haynes there of Pangea Policy on the growing gap between what the president thinks is good for the party and what the party thinks is good for the president. We'll have a very different view on all of this in about 1 hour from now. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's get across to Danny Berger. Hey, Danny.
Hey, John. Protesters rallied in Israel on Sunday, marking 9 months since the war in Gaza started. They're calling for Prime Minister Benjamin Netanyahu to step down and for a ceasefire to bring back hostages still held by Hamas. Truce talks did advance last week after reports that Hamas has broadly agreed to a U.S. proposed ceasefire plan. Now, France could see a political gridlock after a surprise win by a left-wing coalition in the country's parliamentary elections. The New Popular Front won the most votes in Sunday's vote, but it was about 100 short of a majority. President Emmanuel Macron's group came in second and the far-right National Rally in third. Now the focus turns to what sort of coalition is built and how Macron makes nice with a party that wants to undo many of his reforms. Hurricane Beryl made landfall in Texas earlier this morning. Forecasters warned that winds could drive as much as 7 feet of water onto parts of the coast. Officials told residents to take precautions and oil companies to adjust operations. The storm already caused severe damage in Mexico and across the Caribbean. And that's your Bloomberg Brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, September in the crosshairs.
I think this keeps September on the table. As long as we're seeing trends towards a slowdown in top line, the unemployment rate, broader measures of labor markets normalizing, I think that'll be enough.
That conversation just around the corner, looking ahead to this week, looking back at last week. From New York City this morning, good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest premieres Monday at 9 a.m. Eastern, only on Bloomberg Television.
From a steamy New York City, welcome back. Equity futures going absolutely nowhere on the S&P 500. We are unchanged in the bond market. Yields are higher by 2 or 3 basis points, 430.76. Crude a little bit lower. We're down 1 full percentage point at $82 and about 15 cents. Under surveillance this morning, September in the crosshairs.
I think this keeps September on the table. What will cement September is really, another round of data and more importantly, what we see in terms of the inflation data next week and what we see next month. I think that's going to be the case. As long as we're seeing trends towards a slowdown in top line, the unemployment rate, broader measures of labor markets normalizing, I think that'll be enough. Not enough to say that today, but I think once we get to September, that'll be there.
So here's the latest this morning. Traders reviving bets for a September Fed rate cut after Friday's payrolls report. Investors looking for further clues with a double dose of Fed Chair Jay Powell on Capitol Hill this week, plus US CPI on Thursday. Jeff Yu of BNY writes in this: the potential for sharply weaker third quarter growth makes this a summer of discontent with recession risk rising. We are expecting a September rate cut as we think inflation will behave better over the next few months. Jeff, I'm pleased to say, is with us now. So, Jeff, let's put it together. Lots of people back from the beach after a long weekend here stateside, looking back at payrolls on Friday, but also the ISM right before July 4th. Tremendously weak, Jeff. When you look at the so-called totality of the economic data, do you think there's reason to worry?
I wouldn't say it's reason to worry yet, but the direction of travel is clear. You know, there's a difference between an outright recession, which would need to prompt much more aggressive central bank intervention anywhere, you know, versus the slow grind, you know, towards normalization or a normal environment, you know, that we're used to during previous cycles. I think it's more of the latter right now. But the Fed, like most central banks globally, have said they don't need to wait for inflation to seriously undershoot targets before acting. So I think that's where we are right now. And markets are pricing in on course for a September move.
Jeff, you can feel the tension in the bond market further out along the curve. You've got the prospect of a decelerating economy colliding with an election decision that might produce a president with a more, let's just say, a more inclination, higher inclination for a set of policies that could deliver more inflation further down the road. I think what we've got to decide here, Jeff, is should I be buying the 10-year or selling it based on what could happen in the next 6 months?
Well, I think a steeper curve is, you know, pretty much, you know, nailed on at this point. But the back end, you know, what exactly the reasons are behind it, here's where we need to dissect things a bit. I think Europe is, you know, providing a bit of the guidelines, you know, right now. Markets are going to start extracting a fiscal premium, right? So, yes, front end lower, that is reflationary, you know, that helps steepen curves as well. But if you're going to add a dose of fiscal, which could have, you know, questionable, you know, funding, you know, so to speak, which again is what we're talking about in Europe, you know, right now, then I think that's a different story. So again, steeper curve, but in a gradual, normalized, steady manner, or is it going to be, you know, something less so? I think that's what markets need to watch out for.
Is political gridlock really the best case scenario? And I'm talking about the U.S., but also France, for example.
Well, I would say perhaps it's the least worst scenario. That seems to be the market interpretation out of France. You know, you have one side, you know, where pushing for very aggressive, you know, spending views, that's probably not going to happen. But on the other, if I look at Germany, for example, they've managed to resolve their own budget gridlock. And the economy minister talking about increase in 0.5% in terms of the growth rates. So this is mildly reflationary for Europe. Alas, it goes against my euro-dollar lower view. But I think caution in terms of pushing forward the fiscal narrative is important. So from the US's point of view, if nothing too aggressive gets done, then I think that's something bond markets will be willing to accept. But I think we'll cross that bridge when we get there.
Jeff, John was talking about this tension with respect to long-term bond yields, with respect to the fiscal policies that potentially to come down the pike versus growth concerns. I want to talk about the growth concerns aspect. Given some of the jobs numbers, given the unemployment rate rising to 4.1%, given ISM services coming in so far below expectations, where are we in this uncomfortable balance between disinflation and slowing growth?
Right. So from a central bank's point of view, they would like to see disinflation, you know, gradual slowing growth. But on the political side and on the fiscal side, the worry is when politicians see slower growth and they see lower jobs numbers, the impulse, the reflexive reaction almost is to get some fiscal injection to boost demand and to get growth going again. I think that's what could spook markets further down the line. We've seen what's happened in Europe already, in France. But on the other hand, the US has that reserve status. International reserve managers will continue to buy the dollar. They may like US 10-year yields at 4.5%, 5%, that kind of a range. So maybe the US can push that narrative, the fiscally driven growth narrative, a bit further. But how far are we going to test it? You only find that point of no return until after you've crossed it. So I think that's where we need to be a bit more cautious.
Jeff, when I look at your note, you say there's plenty of reasons to worry about both the dollar and the euro. Both have their sets of problems. When you look at the wall of worries on both these currencies, which one worries you more?
Well, in the short term, it clearly still is the euro, because if we look at manufacturing in the US versus manufacturing in Europe, all the surveys, ISM versus the PMIs, you know, nothing to be inspired about there. But the value-added components for Europe, you know, that's coming from manufacturing, and there's just no outlet right now. The ECB can't adopt any stimulus, you know, whereby the US still has the services economy to push forward, and also the dollar can rely on the reserve angle. So, alas, even though the US is expected to have the worst fiscal outlook in terms of the G7 nations, it's still Europe in the short term and over the medium term on a structural basis that I do worry about more.
Jeff, before you go, we've got to ask you about this analysis coming out of Goldman Sachs, led by Jan Hatzius, over at Sintra, Portugal last week. Just assuming what could happen here with proposals coming out of a Trump presidency could raise the average US tariff rate by 16 percentage points to nearly 20%. They plug that into what you could expect for monetary policy, and this is what they had to say. Net implication, hawkish, to the tune of 130 basis points, because the large hawkish inflation effect clearly outweighs the smaller dovish growth effect. Jeff, how are you and the team at BNY thinking about the same thing?
Well, also tariffs would be imposing effectively real effective exchange rate appreciation potentially on other currencies as well. So will there be a disinflationary impact about the dollar? We've talked about benign neglect for decades in terms of the dollar, but given where valuations are right now and you impose additional potential reflation in that sense, then will the initial strength in the dollar brought about by tariffs, will that start to import disinflation as well? I think there are quite a few dynamics there, but I do agree the initial path probably is to look towards an inflationary outlook for the US. So it's not going to look great for the Fed. That's something that they want to push back against, perhaps behind the scenes.
Amazing. Jeff, thank you, sir. Jeff Yu there of BNY out of London. Out of New York around this table a little bit later this morning, Adam Posen, 7:30 Eastern time. Don't miss this conversation. Lisa, him and the team at the Peterson Institute doing a ton of work about what changes to immigration policy could mean, changes to trade policy could mean for this Federal Reserve and the expectation that maybe this Fed is hiking, not cutting, in 25.
And that might be even the next move, considering some of these risks that they put on the table. This we've heard from other people, too, that the Fed could be posed to hike rates not just once, but 6 times, because it's essentially the equivalent inflationary hit from some of these policies. This is the question. When you hear from Fed officials as we're not political, we're going to just deal with the economy as we have it. Interesting to hear what they're really pushing back behind the scenes.
Yeah, they've got to deal with the policy right in front of them.
Yeah.
But this gets complicated, particularly going into September where the data's lining up for that first interest rate cut from this Fed.
They don't want to be accused of what happened in the 1970s. And that, I think, is looming over them, even as the data points in their direction. In fact, with an extra dose of growth worry, I would say, even more than many people had expected.
Adam Posen joining us in about 60 minutes' time. Up next on the program, we'll catch up with Nita Richardson of ADP, looking ahead to a busy week of economic data, including CPI on Thursday. From New York City this morning, good morning. Your equity market just about unchanged.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Let's get you up to speed on some of the scores this morning, and good morning to you all just tuning in. Welcome to the program. Your equity market on the S&P 500 totally unchanged. Similar move on the Nasdaq, just about positive on the Russell. The scores last week, though, Lisa, indicative of some of the concerns people have got about the broader market. The S&P 500 up something like 2%, best week since April. Nasdaq up by something like 3.6. The Russell down on the week.
Because what you had right now is the idea that any kind of rate cuts are going to come with weakness. And you could really look beneath the hood. Take example, the jobs number that we got on Friday. On the surface, it beat expectations, yay. But then there was this downward revision of 111,000 jobs to the previous month, boo. And then you have the unemployment rate going up to 4.1%, somber roll. So these are some of the concerns that are kind of the crosswinds under the current.
What did Chairman Powell used to talk about? Cross currents?
Yeah.
Not crosswinds under the current, or crosswinds under the current?
Okay. Oh.
Is that what he said or what you said?
I'm sure I said it wrong.
Okay.
I'm sorry. It is Monday after a long weekend. I'm going to have a lot of incorrect expressions.
Crosswinds under the current. Now I'm confused. I don't know what I said anymore. Let's get to the other board, the bond market. Let's talk about the crosswinds under the current in fixed income.
Please.
I've got no idea which one's right. Okay, let's get to the 10-year. Just pick out one, because we can only handle one this morning. Never mind three. One maturity, the 10-year. 4.30 is the yield. So last Monday we closed at about 4.46. Think about why we sold off. A lot of people thought we sold off on the politics, and then it got bought. It got bought on the weaker data. They're the crosswinds under the current in fixed income at the moment.
You said you were not going to say it again, and yet it's so tempting. Next, you're going to say I'm going to beat the dead horse with a drum, which is something that I've also said before. Anyway, let's just move on. By the way, on Wednesday, we've got a $39 billion of 10-year auctions, which 10-year notes being auctioned off, which I think will be interesting. You're right. There is this feeling, and you have to think about an investor. If they're going out, they want safety. Do they go into a 10-year yield in some of the projections of what the deficit could look like and what inflation could look like under different administrations? Or do you say, let's just stay with the 5-year, stay with the 2-year, park it in cash? And that's what you have seen for a lot of this year. There was a shift. And this, I think, comes from real growth concerns, especially with the Atlanta GDP now coming down so significantly, but also that unemployment rate. And I think that we need to dig a little bit further into exactly why it rose and whether it is worrisome.
Two things. One, I love that AMH is hanging us out to dry and not saying anything. Two, the bias in fixed income right now, Jeff Yu, BNY, steeper curves. Just steeper curves. Ultimately, the long end's going to rise more than the 2-year at the moment.
Well, and it could be for either reason. It could be because the Fed cuts rates more aggressively because of either growth concerns or because of just general disinflation, or it could be because you get a sticky inflation, a sticky Fed, but longer-term concerns about the fiscal trajectory. Either way, a steepener, that's what he could commit to.
It's one of the worst market checks we've ever done. It'll be me doing an interview with ABC's George Stephanopoulos soon, trying to sort of make up for it and stay on the programme. Let's get to the euro.
You're welcome.
Too soon?
Yeah, that was great.
Let's finish on the euro. Euro right now, 108.36. Let's get away from this. Under surveillance this morning, our top stories, at least 9 Democratic lawmakers are calling on President Joe Biden to end his campaign. Bloomberg reporting Democratic Senator Mark Warner will not hold a previously discussed meeting today to discuss Biden's bid. Talks will continue during a regularly scheduled caucus tomorrow. Congress is back. Is there anything else to talk about?
Congress is back, and cross currents you see in Washington, D.C. is the fact that you have those that are sticking by the president and others who are saying he needs to step aside and resign. Just on this program, Terry Haynes still thinks Biden's going to be on the ballot. And he says it's 50-50. He agrees with the president when the president on Friday said it's a coin toss, basically, this election. But then you have Greg Valliere and Henrietta Trey's, who's going to be on a little bit later in the program, saying their base case is that Biden does step aside. The pressure becomes too palatable for the Biden camp to remain on this ticket.
By the way, I saw you Googling cross currents, so well done. I will just say, I do think that this is really ultimately going to come down to what is the political liability of the uncertainty over who replaces President Biden on the ticket versus this real fear that he could be a political liability to their races. A real sort of difficult moment for a lot of down ballot politicians.
But at the moment, some of the names that are coming out, at least that Bloomberg has reported after this Hakeem Jeffries call yesterday, are individuals who are in secure positions in the party, on committees, and also within their districts. So wait till the voices come back of those that have really, really tough races, and they're saying, ooh, the top of this ticket is not looking good for my race in my district.
I'm looking forward to the conversation with Henrietta Trace in about 40 minutes' time. She thinks there is a really big chance that in the next couple of weeks, maybe next couple of days, that Biden has to step aside. So we'll get that opinion for you a little bit later. Let's get you the latest on France. Heading into political gridlock after a surprise showing from the left, the new Popular Front will not capture enough seats to form a government. But French President Emmanuel Macron's Centre Alliance fends off another challenge from Marine Le Pen and the right. So put it all together, Lisa, ultimately in the bond market, politically agnostic, of course. You're facing a prospect of a France that can't govern itself, can't do things about what most people assume is an unsustainable fiscal trajectory, and ultimately the problems in the bond market don't go away anytime soon.
So I spent time over this weekend trying to understand the French political governing system because gridlock is very different over there than it is in the United States, where it's a positive thing. Over there, it just could render the president completely toothless, unable to govern, which creates a real problem at a time where the fiscal overhang is pretty significant. So you're right, it doesn't do anything. And right now, bond markets aren't responding because they don't know. Right now, it's sort of a clock that's ticking, and the crisis continues with this question of exactly who's going to rule and whether they can come to some kind of coalition.
And it can take a very long time to get this coalition together. I have to say, this was, and Jonathan, you mentioned this earlier, this really wasn't about French voters going out and voting for a party. They coalesced and voted against something. And I find that very interesting because the first round of the election, Marine Le Pen's party did very well. And then when you had the coalition come together, Macron's party and the left say, we're going to pull some candidates to try to make sure we can fend off the right, that's when the left did better. It's very hard to understand where politics is going in France. And Marine Le Pen came out and said, actually, sure, we didn't win, but the tide is rising.
I'd extend that to a lot of Europe. I think there's similarities between what happened in the UK last week and what happened with France over the weekend. The electorate voted against something. In the UK, voted against conservative leadership of the last 14 years. In France, voting against the right and Marine Le Pen coming together to do that. The consequences, though, so different that you end up with a massive majority for Starmer in the UK and you end up with gridlock in France.
I'm jealous of the UK. No drama, Starmer. Dull competence. Ugh.